There was some level of bipartisanship that just occurred here. Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is titled the Semi-Annual Report of the Bureau of Consumer Financial Protection. And without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. And I'll now recognize myself for 4 minutes to give an opening statement. Last month, the Supreme Court upheld the funding structure of the Consumer Financial Protection Bureau, created by Congress in the Dodd-Frank Act. My Democratic colleagues quickly called it a victory. Mr. Chopra, you say the Bureau will now be, quote, firing on all cylinders, end quote. Unfortunately for my friends across the aisle, I'm not sure they fully understand what the court's ruling means. And this may not be the one that they think it is. The opinion stated, Congress has the power to determine or create novel funding mechanisms for federal agencies, reaffirming Congress's power of the purse. I think that's a good thing. This also solidifies that Congress has the power to change a funding stream. Republicans have a legislative solution to make the Bureau more transparent and accountable to the American people. This is something we should all be in favor of. So I encourage my Democratic colleagues to hold off on their victory lap. Instead, they should work with Republicans to put the CFPB on the appropriations cycle and enact common sense reforms to rein in the agency. I can guarantee you if the political shoe is on the other foot in the future, you'll wish you'd worked with us now. I think stability here would be a welcome and good thing. We're already seeing the harm a radicalized CFPB can inflict. Director Chopra, under your leadership, this so-called independent agency has become, in my view, an arm of President Biden's political operation. Data, facts, economics, and sound analysis take a backseat to politically favorable talking points. Even the Washington Post has called the numbers, quote, fuzzy, surrounding how much consumers would actually save in so-called junk fees if they were cut. You're taking your eye off the ball on consumer financial protection and are instead chasing a shiny political object in an election year. We see how this ends. It's never a good outcome for our financial system or the American people. While shirking your responsibility to consumer protection, you've also painted entire swaths of the financial services sector as bad actors. I want to remind you, Director Chopra, these are not all nameless faceless institutions. They are made up of hardworking employees, many of whom are our neighbors and members of the communities we represent. The Biden administration's inflammatory rhetoric does nothing to root out actual fraudsters and bad actors. But it does sow distrust and fear among the very people who rely on the services provided by these financial institutions. Speaking of bad actors, yesterday the committee held a hearing to better understand the toxic workplace culture at the Federal Deposit Insurance Corporation, the failed leadership of Chairman Gruenberg. Director Chopra, you're a member of the FDIC Board of Directors. You also played a role in forcing out Mr. Gruenberg's predecessor, who, by all accounts, was working to address the abusive behavior within the FDIC and trying to address and help employees. It's also alarming that you've not directly commented on Chairman Gruenberg's mistreatment of his staff and the failure to address the misconduct at all levels of the agency. It's safe to assume that if this were a private sector financial institution, you would have quickly called for the removal of its leadership. Instead, we see partisanship on full display once again. I urge you to stop putting politics ahead of people and work with and help improve the financial services marketplace. I'll now recognize the ranking member of the full committee, the gentleman from California, for 4 minutes for an opening statement.
Thank you very much, Mr. Chairman. And first, let me say to Director Rohit Chopra, thank you for your patience this morning. I know that you've been waiting for about 45 minutes. I'm very pleased that you, took the time to not only recognize, many of the members that you work with. But I also want to thank Mr. McHenry. Despite the fact that he waited, he decided to go ahead and get the meeting started, and I'm very pleased about that. And I hope that the other members will show up. They're being held up by Mr. Trump, who decided to come over and hold a meeting, and that's what's happening this morning. So I'm pleased to welcome you back, Mr. Chopra. After 14 years of attacks from congressional Republicans and the industry, last month, the Supreme Court sided with consumers and affirmed what I and committee Democrats have been saying all along. The CFPB is constitutional and here to stay. Now, never in a million years did I think I'd be thanking Justice Clarence Thomas or applauding his ultra-conservative court, but they made the right decision to put consumers first by upholding the constitutionality of the CFPB and rejecting the baseless attacks led by greedy payday lenders, extreme MAGA Republicans, and a convicted fellow and former president. Even a conservative Supreme Court was able to see right through the frivolous challenges to the CFPB's funding structure, while my colleagues on the other side of the aisle still choose to remain willfully ignorant about this. The Constitution is clear that Congress can fund the executive branch, including the CFPB, the Federal Reserve, and other agencies. However, it lacks and has done so since the nation's founding. Now, I'm pleased that the agency can continue its work as the only federal watchdog for our nation's consumers in the financial marketplace. Under the leadership of Director Chopra, the CFPB is combating excessive and illegal junk fees, fighting against housing discrimination and redlining, and holding mega banks accountable for breaking the law and harming consumers. In addition, this week, the CFPB released a proposal that would ban medical debt from credit reports. If finalized, this rule will relieve medical debt for more than 15 million Americans with medical bills and ensure that health issues no longer mean families have to endure financial hardship through lower credit scores. I applaud the CFPB for this proposal and for its work to cut excessive credit card late fees and reduce the typical fee from $32 to $8. Additionally, the CFPB has returned an astounding $20.7 billion to 205 million consumers harmed by financial institutions since we created in it Dodd-Frank. Given this successful track record, it is no surprise that 82% of Americans, including 77% of Republicans, support the agency. However, despite all of this great work and the recent Supreme Court ruling, Republicans have made clear that their effort to undermine and eliminate the agency will continue. There's a long-term strategy by radical extremists to not just challenge and undermine the CFPB, but also critical federal regulators like the Federal Reserve, which are also funded outside of the annual appropriations, as well as the independent funding of Social Security and Medicare. The very first financial services resolution Republicans brought to the House floor demonized Social Security, Medicare, and as being so-called socialist programs that are destroying America. And the insidious Product 2025 similarly calls for eliminating CFPB and ending the Fed, Social Security, and Medicare as we know it. Rest assured, committed Democrats will never, ever stop fighting to block these harmful and misguided attacks. And when it comes to consumers, we will continue to craft legislation to build on the historic efforts of the CFPB. And I thank you very much for the time, and I yield back.
Well, thank you. I would note for the record that the announcement of this morning's schedule had almost every Democratic member of the committee here before 10 a.m., which I would mark is a record for this Congress. And so there is a legislative benefit to apparently the former president's schedule unfortunately, I couldn't take advantage of it because, well, I was the only Republican. So anyway,
Thank you for recognizing that we were here.
if only this would be a regular occurrence with us being on time. I'll now recognize the Chairman of the Subcommittee on Financial Institutions and Monetary Policy for 1 minute, Mr. Barr.
Thank you, Mr. Chairman. Director Chopra, good to see you again. You continue to inject uncertainty into markets, take partisan actions that harm consumers, and show disdain to Congress and industry. You unfairly mislead and propagandize to vilify businesses and their employees through charged rhetoric accompanied by enforcement threats without adjudication. You act unilaterally and arbitrarily, often outside any statutory mandate, routinely without engaging in notice and comment rulemaking in violation of the Administrative Procedures Act, and engage in extortionary civil investigative demands devoid of any due process where you act as judge, jury, and executioner. CFPB's analytical work under your tenure has lost credibility and increasingly amounts to junk economics. The CFPB is opaque under your tenure. Recently, you even refused to provide a witness for a hearing in the subcommittee that I chair. Your current goal is to supply talking points for the president and his re-election campaign, all while denying Americans access to the credit they desperately need in a time of
Gentleman's time has
inflation.
expired. We'll now recognize the ranking member of the Financial Institutions Subcommittee, Mr. Foster, for 1 minute.
Thank you, Mr. Chairman, Director Chopa. And I have to say, I concur with the chairman that Congress does, in fact, work far better when Democrats show up and Republicans take a walk. But since this committee has helped create the CFPB in 2010, the Bureau has effectively fulfilled its mission to protect consumers from unfair, deceptive, and abusive practices in financial markets. And despite being supported by 82% of Americans, the Bureau has come under continual attack from those wishing to undermine its mission. Just last month, the Supreme Court rightly sided with the CFPB against a misguided attack on its funding structure. In fact, the hyper-partisan, poison-filled appropriations process that we are seeing in Congress this week is a perfect example of why the CFPB is appropriately shielded from the appropriations process. And this decision by the Supreme Court prevents harmful disruptions to the Bureau's work and preserves countless protections that it provides for everyday Americans. The Bureau's work is felt across the country, including in my state of Illinois. And as technology progresses, time and again, the CFPB has responded to new and emerging challenges stemming from new scams, new financial products, and rapid changes to the financial system. So thank you again for joining us, and I yield back.
Today, we welcome the testimony of the Honorable Rohit Chopra, Director of the Consumer Financial Protection Board, Bureau. Director Chopra, thank you for being here. You will have 5 minutes to give an oral presentation. Without objection, your written statement will be made part of the record. You're now recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman McHenry, Ranking Member Waters, and members of the committee, thank you for holding this hearing. Since its creation, the CFPB has returned $20.7 billion to consumers through our law enforcement and supervision, and we have created unquantifiable returns for the over 205 million Americans and honest businesses harmed by the illegal practices that we have stopped. We are currently on track to save people $20 billion in junk fees every year, and we also expect to process over 2 million complaints from Americans this year. Since my last report, we have advanced a number of key initiatives on credit cards, on medical debt, artificial intelligence, open banking, and more. My written testimony in the CFPB semi-annual report details much of this work. Today, though, I want to highlight the pressing need for the Financial Services Committee and the CFPB to address the protection of personal data and financial privacy in an increasingly digital and algorithmic marketplace. The U.S. has to lead when it comes to a competitive and innovative market of the future, and at the same time, this cannot be at the expense of unchecked surveillance like we have seen in China and other markets. I see this as a critical issue with high stakes for our economy, our national security, and our liberty. For over 50 years, the House Financial Services Committee has played a major role to protect data in our society. The Fair Credit Reporting Act is one of America's only data protection laws that covers all background reports assembled about Americans for use and sale by third parties. The FCRA includes meaningful restrictions to prevent abuse and misuse of data. Section 1033 of the Dodd-Frank Act provides consumers with the right to access and control their personal data. And the CFPB takes very seriously our mandate when it comes to these laws on privacy and data protection. We're progressing towards finalizing open banking rules to develop data sharing standards that are secure and have privacy protections when people transfer their personal financial data to competing companies. We finalized a key part of the framework last week, which will set the stage for finalizing the rest of the rule this fall. We're also moving forward to propose a rule under the Fair Credit Reporting Act to restrict uses of certain sensitive data by so-called data brokers, who are assembling dossiers about each of us without our consent or permission. We are pursuing this as part of a broader government effort, a bipartisan effort to protect our national security and our service members from countries of concern that might seek to purchase and exploit sensitive data on Americans. We see how this is not just for fraud, but this is also to undermine our country. While the CFPB is taking important steps on protecting data, it is critical that House Financial Services acts too. In my discussions with members on both sides of the aisle here, there is clear interest in doing more to protect privacy, ranging from the intrusive communications related to trigger leads when applying for mortgages or addressing concerns about the privacy of our sensitive payment transaction data. Big tech giants are increasingly entering financial services and harvesting personal data. And since my last appearance, there's been public reports that large financial firms ranging from PayPal to JP Chase are developing plans to fuel more targeting and advertising using their data. These plans to potentially monetize sensitive financial transaction data are a reminder that the U.S. is slowly lurching toward more financial surveillance and even financial censorship. We're eager to work with this committee and all of you to do more to protect against abuse and misuse of data, including by enshrining more protections into law. We also believe there's more opportunities to advance legislation to accelerate open and decentralized banking in our country that also further protects people's most sensitive data. So I do think there is so much more we can do together to tackle this problem. I'm really encouraged by all of the efforts that we have been doing together, and I'd like to continue to work on that with you. Thank you. I look forward to your questions.
Well, thank you, Director Chopra. I'll now recognize myself for 5 minutes for questions. I want to begin with data privacy. This is something that you have spent time on as Director of the Bureau. It's something that we in Congress have spent some time on. The last few Congresses on trying to update our data privacy standards for financial services. So let's start there. When we discussed our data privacy bill at the beginning of this Congress and passed it out of committee, we focus on Gramm-Leach-Bliley. Speak to the portfolio of data privacy laws that you enforce and how you do that.
Yeah, so I would think about the range of privacy laws that are not just financial in nature. The Fair Credit Reporting Act is not just about the credit reports we think about. It's also about all the other data that is collected about us and sold. You also put into law Section 1033. That is about how consumers have control over their data and how they can permission it and protect it. There's also key data security standards that the laws that you oversee have important roles to play. So, Mr. Chairman, the CFPB is very, very eager to make sure we are enforcing this properly and that we are developing the rules that are fit for the times of artificial intelligence and more intrusive data collection.
Okay, so you spoke specifically in your opener about bad actors internationally harvesting Americans' financial data through unregulated or loosely regulated means. Explain.
Well, when this committee 50 years ago was involved in putting into place protections, They were worried about these companies collecting data and sometimes rumors about us for sale. So the answer was the Fair Credit Reporting Act. But we see there's new types of data brokers that may not see themselves as having to comply with that. I think we all need to do work together to make sure they know they have to respect those data protections.
There are a lot of controversial things that the Bureau does. It's uncontroversial that you are the repository of financial data protection, and there's no controversy around your enforcement of existing laws. So let's drill down on FCRA, Gramm-Leach-Bliley, and 1033. Gramm-Leach-Bliley, standard from the 1990s, it was much more about the financial use of data among affiliates within a corporate structure. We have a bill to update those data privacy standards, modeled in large part out of California. We've had a set of questions in exchange about secondary use of that data. But how would you, in a measured way, update the Gramm-Leach-Bliley data standards?
I think we should accept that that notice that we get all the time is not really effective when it comes to having meaningful control. I would urge you all to think about some common sense permissible purposes or restrictions that really draw the line of how that data can be in some way shared or reused or monetized. In some ways, it's similar to what was put into place in the Fair Credit Reporting Act as well.
Okay. You mentioned trigger leads. Describe why do you mention trigger leads as it relates to data protection?
Well, it is a privacy issue. I think that when you apply for a mortgage loan, sometimes you then get inundated with calls, sometimes from sketchy players. I don't think most people think that when they apply for something, there's going to be a deluge that everybody knows about it. And mortgage lenders feel that their customers say to them, did you tell everyone? This is a privacy issue too, in addition to one about fairness.
Okay. Now, 1033. I have a concern that if your regs are put in place, or your proposed regs, that this really enshrines incumbents and the value of incumbents with data, financial data. How do you address that?
I think what we want to do is make sure that you can't have a bait and switch. You can't say I'm offering you an auto loan really to harvest it and sell for other purpose. So what we're trying to do, Mr. Chairman, is find out with respect to secondary uses, product optimizations, how do we get that line right so that it does not really entrench anyone, but still respects people's privacy? The bait and switches that we see, we should have no tolerance.
Okay. And do you have a timeline for this rulemaking?
We're going to finalize it this fall. My goal is October.
Okay. With that, thank you. I know there are other specific questions members have, but thank you for addressing data privacy in particular. We'll now recognize the ranking member, the gentlelady from California, Ms. Waters.
Thank you very much, Mr. Chairman. But I'd like to again thank Director Chopra for the fantastic job that you're doing and the leadership that you're providing and the way the consumers now have a real voice with your leadership. And I want to talk about one more issue that I think is so important to all of the people of this country, and that's what you're moving to do on medical debt. I understand that you have moved to get started with a rule on medical debt. Will you explain to us what you're doing?
Yes. So under the Fair Credit Reporting Act, Congress put into place a prohibition when it comes to medical information. But there has been a tweak in the rule from many years ago that has really allowed, in many cases, unverified medical bills to be permeating people's credit reports. And what we've seen, Congresswoman Waters, is that the accuracy issues are so serious on those medical bills, and we have a situation where people are facing a total surprise that something is on their credit report. They cannot rapidly fix it, and it really can jeopardize their ability to get that loan or to pass a background check. So we have looked at this issue for years. There's not even much predictive power of these medical bills. We haven't proposed getting rid of medical credit cards or other medical loans, just these bills that are often stuck in an insurance company doom loop. And we're going to be looking for feedback on this, but I think this will be a positive step in direct line with what Congress wanted of prohibiting this medical information on credit reports.
Let me just go back to another concern that I have, and this is about late fees and junk fees. Well, I can tell you how concerned I am about it. Why don't you just tell us exactly what you're doing about junk fees?
Well, there is an all-of-government effort to combat this creep of fees that has really permeated throughout the economy. This isn't something that's really a negotiated price. It's often not upfront. So we've taken a series of steps to make sure that existing congressional prohibitions, like in credit cards and in truth in lending, are being adhered to. At the end of the day, we think markets work best when people can see the prices up front, compare it, and people offering the best service and price can win out. The more we shift this up front, the better. I know there's been legislation passed by the House when it comes to things like hotels and tickets. We do need to do more to make our markets work free of these junk fees.
Thank you very much. You have made it a priority also to hold large financial institutions accountable for their repeated violations of the law. In a speech you said, and I quote, "Corporate recidivism has become normalized and calculated as the cost of doing business," and I can't agree with you more. I appreciate the approach you decided to take to rein in repeated behavior by non-bank firms that callously violate the law and harm consumers. Can you again further help us out by discussing the rule you issued to implement a public registry for non-bank repeated offenders and how it will help CFPB rein in bad practices in the marketplace?
It's a huge problem that when a small business or small company gets in trouble, they face being totally wiped out. But for the same exact conduct, a very large player really can just pay a fine and move on. There has to be some equal justice. When you have the same misconduct, there should be a similar sanction. You cannot have a situation where small businesses just get the hammer and everyone else is sort of getting a light touch. We have put into place a rule that will allow law enforcement to coordinate and stop repeat offenses before they go on. We have seen scammers set up shop in one state, get caught, move to another state. I think this is a needed effort to make sure we do end this practice of constant rinse, repeat offenses.
Thank you so much. Of course, we've seen banks like Wells Fargo repeatedly break the law. And then with regional bank failures last year, we saw how repeated supervisory warnings were ignored by Silicon Valley Bank and more and more and more. Thank you for your work.
We'll now recognize the gentleman from Kentucky, Mr. Barr, for 5 minutes.
Director, I'm looking at a survey right now. 7 out of 10 consumers rank good fraud protection as their top consideration when choosing a financial service provider. And it stands to reason because in 2023, total global fraud costs reached almost $500 billion, including payments, check, and credit card fraud. This is clearly a major risk to our financial system, institutions, and American consumers. Unfortunately, your regulatory efforts will actually decrease financial institutions' ability to provide meaningful fraud protection by making it more costly to provide these services. For example, your flawed credit card late fee, overdraft, and the credit card reporting rules or guidance on remittance transfers. Impeding a financial institution's ability to charge consumers for a service they provide is your attempt to make financial institutions public utilities and not free market businesses. Do you recognize, Director Chopra, that fraud detection and prevention is very, very important, number one? And number two, do you recognize, and I know you care about consumers, do you recognize that the junk fee, the quote-unquote junk fee agenda will actually hurt consumers by reducing fraud prevention?
So let me be very clear. What you're saying is not accurate in my view, respectfully. We have done so much to make sure that we can do more to detect and deter fraud. I think fraud, when it comes to identity theft, when it comes to the use of generative AI, is going to be an increasing issue, and even old school check fraud is increasing.
I agree, but have you actually?
I do not.
I agree, Director. Reclaiming my time. I agree that AI and all these other technological innovations can help with fraud prevention. But do you actually talk to the financial service providers that you oversee about the junk fee agenda and how that's going to reduce their ability to invest in fraud protection? Do you actually talk to them about this? The regulated entities that you oversee? Because they tell us
very frequently.
Well, they tell us that you don't listen. Because what they're telling us is that your junk fee agenda is going to limit their ability to prevent fraud. And I want you to take a look at that. I think you need to take a look at that, because if you don't, it's all junk economics.
Well, we are doing a lot more.
Second question, let me move on, because I want to talk about data that's supposed to undergird your administrative decision-making. Under your leadership, the data collection efforts and cost-benefit analysis have simply lost credibility. The Bureau has played fast and loose with the data you rely on, ultimately leading to harmful rulemakings that rely on junk economics. For example, the Bureau's so-called analysis of the deterrence effects of late fees is largely unjustified speculation that favors political results you seek. The overdraft rule ignores market trends and innovation and instead cites data that's more than decades old. In the credit card late fee rule, your calculation of the impact to annual percentage rates changed significantly between the release of the proposed and final rules, relying on a mere assumption from a previous academic paper rather than any credible quantitative analysis. The mortgage closing costs RFI cites only 2 data points. Shockingly, for the credit header provision of the FCRA rulemaking outline, you aren't even appealing to data at all. So, Mr. Chopra, with so many examples of misuse or complete avoidance of data, and increasing use of unjustified conclusions from what can only be loosely called analysis, how can the public or Congress trust the rulemakings or the administrative decisions that you promulgate?
Well, some of it is really a balance. We try and make sure that we're using existing data that's already there, because we often get feedback, including from you, about doing too much collections. So we will rely and look at old studies as well as new studies to see changes in the market. I would say empiricism is a foundational part of the CFPB's work, because that is a lens in how we can make the best possible decisions. I agree, sometimes we won't always have the newest and freshest in fast-moving markets, but it's also a balance about making sure we're not engaging in too much burden as well.
You've got to do a lot better job, because you just don't have credibility. The data is not there to support any of what you're doing.
I would respectfully
I know you disagree with that. I disagree with you about that. The Bureau should want rigorous cost-benefit analysis to defend the Bureau's decisions. This is in the interest of the Director's office. It's in the interest of the Bureau to have defensible data, and you don't have it. Final question, Director Chopra, who decides if a civil investigative demand appeal is approved or denied?
So with CIDs, sometimes they go to a district court, sometimes they can go to appeal to the director. Oftentimes it's negotiated.
Yeah, so my time has expired, but this is the problem. You are the judge, jury, and executioner, and that's why people don't see the process as due process. I yield.
Gentlewoman from New York, Ms. Velasquez, now recognized for 5 minutes.
Thank you, Mr. Chairman. Director Chopra, welcome. Thank you for being here. Earlier this week, the World Bank upgraded its outlook for the global economy, estimating that it will expand by 2.6% this year on the strength of sustained growth in the United States, not Russia, in the United States. The agency expects the U.S. economy to expand by 2.5% 2024. All this is happening thanks to the economic policies President Biden and agencies like the CFPB are taking. Director Chopra, I'm grateful for your work putting over $20 billion back in the pockets of working families. As the ranking member of the Small Business Committee, I am particularly grateful for consistently communicating the importance of sparing competition and making opportunities available to small businesses and new entrants. I also appreciate that you have committed the CFPB to ensuring we have the data to make sure all Americans have the opportunity to access credit. For too long, we have marginalized huge numbers of our country because we lack clear data on lending. These policies will keep the U.S. a country where all small businesses can succeed. When you are creating rules, do you ever tailor them with smaller institutions in mind?
Yes, and under my leadership, we have routinely, in many ways, proposed exemptions for them.
Isn't it true that over the last couple of years, you actually exempted smaller institutions from some of your requirements, like the Section 1071 rule, to make sure they had the flexibility to serve their communities and grow?
Yes, we exempted thousands of institutions in some of our rules.
Haven't you also provided smaller institutions with more time to comply with a new rule than their larger counterparts?
Yes, substantially more time.
Isn't it also a fact that you have intentionally focused the Bureau's enforcement activities on larger, repeat offenders and avoided going after smaller, less resourced businesses?
Yeah, I inherited an enforcement docket that I think was too heavily focused on small players, and we have instead shifted to players engaged in nationwide, market-wide harm.
Thank you. From what I have seen of your work, the CFPB has incorporated the concerns of small businesses and their unique needs throughout its work, specifically when it comes to the final rule on credit card late fees. I understand that it only applies to the top 30 or 35 issuers. Isn't that correct?
That's correct.
And that financial institutions under $10 billion in assets are completely exempt, which includes small banks and virtually all credit unions. Isn't that also correct?
That's right, and we see small banks and credit unions wanting to provide them tools to gain more share as they are offering lower rates on average, and they're not building business models on back-end fees.
I thank you for your thoughtful work on behalf of consumers and smaller institutions. Director Chopra, you and I have talked extensively about the need to enhance federal disclosure requirements for small business financing. Increasingly, we have seen states becoming more active on commercial financial disclosures. 7 states have already passed laws requiring disclosures for small business borrowers, and 7 additional states are debating similar measures. However, not all disclosures are created equal, with some enacted laws requiring APR disclosures and others not. What is the practical impact of this patchwork of requirements both on commercial lenders and small business borrowers?
You know, one of the things that's important for the committee to recognize is many small businesses actually use both consumer credit, especially the smallest businesses, in addition to small business loans. I think comparability and standardization of how one can compare apples to apples is key, and I do encourage you to continue pushing for clear small business loan disclosures.
Thank you. Mr. Chairman, I yield back.
Gentlelady yields back. We'll now recognize the gentleman from Missouri, Mr. Lukemeyer, for 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Chopra. You made a lot of comments a minute ago about data protection, and I think it's one of the most serious issues we have facing us today. But my comment would be, if you're really serious about data protection, I hope that you work with us with regards to us being able to rein in beneficial ownership and the rulemaking that goes with it. Originally, it was only 4 data points. Now it's 52 data points that we're looking at. That really endangers a lot of information on our citizens and businesses unnecessarily. This is where you can help us if we can rein this in and get it back to where the rule originally was. We sure appreciate your help on that.
And some financial institutions and others have raised this with me. It is part of a FinCEN rulemaking, and I'm actually happy to talk about that with you.
Look forward to it. One of the things that we talk about here is junk fees, which really is, that word really riles me up because it is not a legally enforceable term. It's something you guys have made up. But one of the things that is included in junk fees, and your definition anyway, is late fees. I have here a Cato Institute a letter from Nicholas Anthony, 101 late fees charged by the government. Have you looked into any government late fees at all?
Yeah, actually, I think there's a need to do a wholesale review of some of the fees that are being charged even by government. There has been ongoing discussions about how to make sure that they're in line with what Congress wanted, that they are sensible, that we have a good policy around that. So I would really support looking at a lot of those fees.
Mr. Chairman, I'd like to introduce for the record, without objection, the letter.
Without objection.
Thank you. Also, title insurance. Director Chopra, Congress explicitly omitted the business of insurance from CFPB statutory authority under Dodd-Frank. In fact, the business of insurance was explicitly excluded from the jurisdiction of CFPB because it's effectively regulated at state level. You've confirmed under oath and on the record before this committee that the CFPB has no authority to regulate the business of insurance. Do you stand by that?
Correct. The business of insurance is in the FTC Act, the CFPA, it's in the McHenry-Ferguson Act. It describes a certain set of activities related.
So why are you asking for information with regards to title insurance fees and trying to get in there and get in that business?
Well, just so you know, we do regulate aspects of insurance. Certainly the Real Estate Settlement Procedures Act, the CFPB, I think for years has taken enforcement actions related to title. We have important roles when it comes to mortgage insurance. We also have a role in homeowners insurance. So I think the business of insurance really relates to some capital and liquidity issues. But do know, I'm very aware about the restrictions we have, and we're trying to be very mindful about where we do have explicit
Well, it would
authority.
appear to me that there's a severe encroachment there on the insurance folks when you're looking at this, at title insurance. I don't see any reason for the CFPB to involve in it.
Well, the Real Estate Settlement Procedures Act specifically goes through how things are disclosed, including title insurance. It also talks about
If it's correctly
kickbacks.
disclosed, where is your authority?
Well, I'm happy to share with you, we have a range of authority as it relates to insurance in the mortgage market. And again, as it relates to the business insurance that the state regulators oversee, we respect their role completely.
Okay, very good. You talked a minute ago about credit cards for medical payments. And, you know, I wrote a letter to you some time ago. In fact, it was almost a year ago, actually, back in October of '23. And I got a letter back that didn't answer my questions with regards to that. I'm very concerned. It's a good way for some people to pay their bills. It's a regulated product, and yet you're trying to restrict that from what I understand. And the questions in my letter were not answered, so let's try to go through them right quick. Please indicate where the term medical payment product is used anywhere in statutory law.
So let me just clarify. The rule we have proposed as it relates to credit reporting and medical debt does not include medical credit cards. So medical credit cards are a fairly more advanced innovation of recent years where there is point-of-sale loans or credit card brokering at the healthcare facility. We have been studying this market because it's been growing quite quickly and it has been a source of some significant consumer complaints. We have not taken any sort of specific action on it, but I think we do want to understand when a patient
Where's your authority to do that?
Under the Truth in Lending Act.
Okay, to regulate medical product, medical payment product?
No, any sort of extent. So Congress in 1968 set the parameters for extensions of credit in the Truth in Lending Act and did assign authority to enforce that to the CFPB. So even if you are getting a third-party medical loan, regardless of where it's offered.
Thank you. My time's expired. I yield back, Mr. Chairman.
Gentleman from California, Mr. Sherman, is recognized for 5 minutes.
Mr. Chopra, thank you for all your agency does. They don't give me enough time to go through the whole list of everything you've accomplished. I do hope that you're successful with limiting late fees on credit cards. And I know that's held up in the court, but this is a chance to save $10 billion annually for American consumers. And of course, with today's computers, the cost that the bank incurs dealing with the issue. I mean, I remember, in the 60s, the 70s, people, a human being would have to look at your late fee and then decide what to do. Human beings are not involved in determining what to do if my credit card payment comes in late. And second, I want to thank for your prompt response. Look forward to working with you on the issue of getting your payment in by a particular hour. Because we in California are told your bill's due June 30th. So if at 2:30 p.m. on June 30th, you try to pay, you get a late fee. And in fact, today, especially with automated systems, people think if it's due June 30th, they can watch the 11 o'clock news and still get their payment in on time. And then instead they get a late fee. I want to pick up on what the ranking member of the Small Business Committee pointed out, how important it is that you craft your regulations for small and community-based financial institutions. And I do want to say, you're quoted as calling title insurance a junk fee. I hope that was, and you're shaking your head. You wouldn't call that a junk fee, neither would I. Now, Senator Kennedy, with whom I've worked with well on a few things, has asserted that the CFPB is not following the law because this year, most recent year, the Federal Reserve has revenue but does not have earnings. And I think the senator may have it all wrong. It is true that due to higher interest rates, a smaller Fed portfolio, the Fed has not had extra money to transfer to the U.S. Treasury in a particular year. But Congress certainly did not expect that your operation would shut down or repopulate based on whether the Fed is making money in a particular year. That's why we use the word earnings, but Senator Kennedy thinks that we use the word net earnings. No, net earnings is found elsewhere in the Federal Reserve Act, meaning that anyone looking at that act knows that there's a difference between net earnings, which is net profits, and earnings, which is revenue. And of course, the senator seems to lose track of the fact that the Fed has made a lot of money in prior years, and there's nothing in the bill that says that your budget has to come from earnings in a particular year. Believe it, I do want to focus on manufactured identities. We've got you hosted an academic research meeting on auto lending research. In the first half of 2023, manufactured identities cost the auto lending industry almost $2 billion. That's up substantially. Will you consider studying different ways to prevent the fraud from manufacturers' synthetic identities?
Yes, we need to, industry and the regulators need to be thinking with Congress about future ways of doing identity verification. I think our way of doing it now is expensive, and it also doesn't deter fraud.
I will also point out that our colleague, Mr. Foster, has the concept of digital identity for all Americans that makes an awful lot of sense. Credit header data is used to combat fraud and to comply with the Know Your Customer requirements. People on this committee know how important those requirements are to our society and to me personally. But if we called a credit header data report a, quote, consumer report, that would interfere with the process. Can we provide that credit header data is not a consumer report when used to comply with the Know Your Customer?
Well, it is, compared to others, it is sort of a short form consumer report, but I take the point it is important for financial institutions to be able to use certain information to combat fraud, and we're going to make sure we can keep that going.
Thank you.
Gentleman's time has expired. The gentleman from Michigan, Mr. Heising, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and I'd like to just start with submitting an article to the, for the record from Law and Liberty. Can the Fed fund the CFPB? So the analysis from my CPA friend from California, let's just say that's not a universal view of how the CFPB can or cannot be funded through those federal funds. Mr. Chopra, I want to talk a little bit about the complaint database. I'm assuming it would not surprise you if I told you that the complaint database is increased nearly fivefold since 2022. I mean, earlier you just said 20, I think it was 2 million complaints that you have. You're aware of that, correct?
I don't know if it's exactly fivefold, but we have seen quite an increase.
Okay, our data indicates fivefold or thereabouts. Would you be surprised, however, to hear that the duplicative narratives when it comes to those complaints are somewhat of a regular occurrence in the database?
Yeah, we do have this issue, for example, when someone has a mortgage servicing issue, they may file it against the lender or the servicer, or when there's multiple parties involved, but we also want to make sure that we're seeing how different users are using the system so that we can better control it.
So what I'm hearing, I think you're trying to parse to say, well, it might be really the same complaint there or the same person, so that's why they're using the same language. But according to third party, and then you were, I think, acknowledging at the end there that, well, you're trying to figure it out.
Yeah,
well,
we're trying to see if there's some parties that are filing multiple. We're always policing.
Let's explore that a little bit. According to third-party analysis that we've received, it appears that some are using the CFPB's database to discharge legitimate debt that they owe. That'd be a concern. In fact, there's videos online that promise results if they follow certain steps, including using your database, that there's going to be debt relief. For example, you have some narratives that are literally word for word, character for character, being repeated thousands of times. In fact, the top narrative in the complaints this past year was repeated over 8,000 times. So I'm assuming you can't view this as a coincidence.
Yeah. We have to figure out, to the extent that there are algorithms being used or AI being used or providers who are seeking to dispute debt relief.
I think that trail of breadcrumbs is pretty
and this has
clear.
been an issue for many years that we have to be always attuned to,
All
and
right.
that's why when we forward it for
So
response,
I'm so sorry. I've got 2
Sorry.
minutes. I need to move on because I also need to touch on the FDIC. I know the chairman had done this, and the independent report that had gone out. You didn't mention that in your written opening, but do you agree with the findings?
Yeah, I think it's very
Okay.
important that the recommendations be
right.
effectuated quickly.
And so, as the head of an agency yourself, you agree, as the report said, culture starts at the top.
Well, certainly, I think leadership, the board is
That's all right.
always responsible.
I'm looking for short answers. As a director of the FDIC, do you believe that you have a responsibility to ensure that there is a working environment that is free from discrimination, sexual misconduct, and harassment?
Yeah, the law
Yes.
delegates
Okay.
to the board the responsibility to
Okay,
oversee.
let's explore that a little bit. Yesterday, Director McHenry indicated that although the FDIC is quote run by a board, most of the decision making is actually done by the chair. I assume that's been your experience, but I'm curious, how much of the day-to-day operations are you involved in?
I'm not, but I try to make sure I understand all of the things that are appropriate for the board, and certainly
Okay.
this issue.
Sorry, I got 50 seconds left. Based on the report and the widely acknowledged problems outlined by the Cleary-Gottlieb report, are you prepared to play a more active role in making sure the culture is fixed at the FDIC?
Yes, and since the
Okay.
report, I've been increasingly engaged
great.
in making sure that we
Now,
are retaining.
yesterday, some of my colleagues on the other side of the aisle stated that, quote, female leadership was needed at the FDIC. Now, we've talked about this before in committee and private, your active role in forcing out the last female chair of the FDIC.
She actually resigned.
She resigned under a
upon
tremendous
Justice
amount of
Department
pressure, sir.
inquiry.
A
During a
tremendous
Justice
amount of
Department
pressure. You
inquiry,
talked
she
to her
resigned.
privately, you talked to her publicly. It's a tremendous amount of pressure that you helped apply.
I don't
How
agree.
would you
She
respond to my
resigned
colleagues
after a
who
Justice
suggest?
Department
How would you
inquiry was
suggest? My time. How would you respond to my colleagues who suggest female leadership is needed?
Well, at the end of the day, we want diverse leadership so everyone feels included and valued. That's very important.
Yield back.
We'll now recognize the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. I want to start by saying, Mr. Director, how pleased I am by the Supreme Court's recent decision to uphold the funding structure of the CFPB. The CFPB has a long track record of success, helping hundreds of millions of people. constituents in both red and blue states. And it causes them to be made whole. I hope that these types of funding challenges are now behind us so that the CFPB and you, Mr. Director, can remain focused on doing the good work of delivering consumer relief for the people. And that's why we created this bureau for the consumer, the only one that did not have a voice here in Congress. Now, the CFPB has a wide variety of rulemakings underway, and I want to try to touch on two. Hopefully I have the time to do that. On one, the proposals under consideration related to the Fair Credit Reporting Act. I appreciate your engagement on the issue of protecting consumers from identity theft. The impacts of this can be devastating, and I know we all want to make sure our constituents and loved ones are strongly protected from bad actors. And in a recent response letter to me and several of my colleagues, you stressed that the Bureau takes, and I quote, takes seriously the need for financial institutions to be able to prevent identity theft, fraud, and money laundering, and that you will not issue a rule that will prevent financial institutions from meeting the requirements of the Bank Secrecy Act. So I thought this was very good. So let me just make sure, I want to confirm that when you issue the proposed rule, it will not include restrictions that make it more difficult for banks to use their state-of-the-art tools to combat identity fraud and comply with anti-money laundering laws. That's correct?
Yeah, we're still going through the process of developing a proposed rule, but certainly fraud detection, verifying identity is just so critical to how the banking system works. And I know you know this well, we are seeing all sorts of entities trying to harvest data about people for illegitimate uses, stalkerware, national security issues. But when it comes to reasonable fraud detection, we want to make sure they can continue.
That's correct, and I thank you for that. And let me just follow up on that one for real quick. How does the CFPB plan to tailor the rulemaking to distinguish between companies that only collect consumer data versus those that sell consumer data?
Yeah, so we're working on this in the scope of the Fair Credit Reporting Act, and I just want to raise, as Chairman McHenry and I were discussing, there is a need to update a lot of our data protection laws. And I understand the CFPB, we're going to administer our rules, but we're dealing with a statute that is old. And I think it is time to constantly be thinking about ways that you all can be updating it as well, especially for the digital age and where we have fundamentally different threats.
Thank you for that. The second area is that the Bureau has said its proposed rule under Section 1033 would grant consumers more control over their financial data and protect it from misuse, discourage junk fees, and give consumers power to walk away from bad service. Now, I'm very excited actually about that prospect because I hear that even at my own home, so this is good. Under the proposed rule, data assessed from banks through data aggregators for primary use would be allowed. And because incumbent banks already have the consumer's data being considered in the rulemaking, they would not be subject to the limitations for assessing data that newer and smaller firms would be subject to. Given the fact that incumbent banks and other institutions already hold years of accumulated consumer data considered in the rulemaking, I'm concerned that the limitations introduced by the proposed rule could mean that larger, more traditional incumbents will have a large competitive advantage compared to innovative fintechs, credit unions, and smaller banks. How will the rule issue ensure that newcomers and smaller players can compete on a level playing field?
Well, that's exactly the goal. You'll be able to take all of your data with that incumbent bank, permission it securely and safely to any bank, fintech, whatever it may be of your choice. This is a huge way of unlocking the hold that sometimes an incumbent has over you, and it's a slow way to ultimately get to faster switching. Consumers are going to be better off if they can quickly switch without going through lots and lots of paperwork and bureaucracy, and that's exactly what we're trying to achieve.
Thank you for that.
I'll recognize the gentleman from Georgia, Mr. Loudermilk, for 5 minutes.
Well, thank you, Mr. Chairman. Director Chopra, thank you for being here. In October of last year, 2023, the CFPB and the Department of Justice jointly warned lenders that denying lines of credit to borrowers based on the borrower's immigration status may be a violation of the Equal Credit Opportunity Act. Specifically, you warned that immigration status could be used as a proxy for protected characteristics and lead to civil rights violations. Now, I'm concerned that this overall guidance, and others are concerned that it's just too vague, but I think it could have a chilling effect on certain sound, risk-based lending practices, which could leave institutions with little choice but to lend to borrowers who are unlawfully present in the United States. So, does the Bureau still stand by this October 12th joint guidance on immigration status and lending?
Well, I'm happy to clarify. This guidance is very clear that you absolutely can use immigration status when you are thinking about your
cannot.
You can.
You
It is
can.
very clear that you can. I think what we are trying to also warn about, you may have seen the enforcement action against Citigroup for discriminating against Armenian Americans. So national origin discrimination is illegal. So
But
the
that's
guidance.
different than immigration status.
Oh, yeah, you cannot use national origin, but you can use immigration status. And what we're trying to say is almost exactly what you're saying. If it's part of a risk determination, that's fine, but you want to be careful that you're not unnecessarily just excluding based on one. And by the way, we're talking, it didn't have anything to do with unlawful immigration. It had to do with even immigration status, green card versus naturalized citizen. It's much broader. So I hope we can do more to clarify that and make sure it is clear. The guidance does say you may use immigration status.
So, based on what you're telling me here, it definitely needs to be clarified. Because
Well,
lenders are out there are looking at, is the CFPB trying to force lenders to
No, we're
lend
not trying to force
illegals?
lending to anyone, and I think we have gotten some questions about this, and we're going to try and continue to work with institutions who have questions, but overall, we've actually received some positive feedback from institutions about this.
So, can you clarify this to ensure that lenders can use whether or not somebody's here legally
Well,
as a
it's
qualification?
written in
because-
the guidance, so
So-
we'll figure out. I'm
Right.
happy to talk to you further, and especially if you hear an institution that has specific concerns, we'd be happy to meet with them.
So let me just make sure we clarify, because a lot of times things are said in committee, but by the time those who are here testifying get back to their organizations, things change. Is it unreasonable to assume that if someone, because they're not clear on this regulation, and we've seen, we're in an era to where there is not a perceived partnership between regulators and lenders or financial institutions. They see you guys as opponents because of the way that things have been operated. Taking that approach, and with vagueness of a rule, and they feel like that they have to make loans to those who are not here legally. If you're not, you don't have to be here, you don't have to be a naturalized citizen to buy property. But if you're not here legally, you're subjected to deportation. Do you agree that that adds additional risk to a lender if they lend to someone who could be deported, and if they are, how do they recoup that?
Yeah, we never tell institutions who they have to lend to or that they have to lend to someone. What is prohibited under federal law, and where we have found issues, is discrimination based on religion or discrimination based on national origin. That's codified in statute. So there is immigration status. What the guidance tried to articulate is just be wary that you're not engaging in certain types of prohibited discrimination. But you can use immigration status in your risk determination. And what you said up front, I think that's what the guidance is getting at.
Well, I think it definitely needs to be clear, and I will argue the point that you may not say that you're forcing a business to loan or act in a way, but through rules and through enforcement actions, indeed, not just you, but many regulators actually do.
Well, respectfully, I think the issue you're concerned about, many of those individuals cannot even be authenticated under Bank Secrecy Act. So I think I'm happy to talk with you further.
All right, thank you. I yield back.
Gentleman yields back. The gentleman from Georgia, Mr. Scott, is now recognized for 5 minutes.
Thank you, Mr. Chairman. You know, I've been on this committee. Excuse my cold. I've been on this committee 22 years, and no one has greater respect for my Republican colleagues than I do, tell you the truth. But as the good Lord told David in the book of Psalms, the man I was named after in the Bible, he said this to him, "Ye shall know the truth, and the truth shall set you free." Here is the truth. In 2023 alone, the CFPB resolved lawsuits that required lawbreakers to pay consumers over $3 billion in compensation and $500 million in civil liberties. And under your leadership, Director Chow, your leadership, the CFP bill has held financial institutions responsible for engaging in predatory practices, ensuring fair treatment of consumers when they open an account. And listen to this one very carefully. Just in this past year, as of May 24th, and also in 2023 alone, the CFPB resolved lawsuits that required lawbreakers to pay consumers $3 billion in compensation and $500 million in civil penalties. You have an outstanding record, and not only your record, but the record of President Biden and your staff. And please tell them that we respect that. And the truth is here. And that's what I wanted to get clear in the very beginning. No ill feelings to my Republicans. They have to do what they have to do. But I wanted to make sure that we spoke the truth for the American people. Now, but here's what I'm concerned about, this repeatism. I want you to talk about that and let us know what you're doing in that. Because thanks to this little deal right here, these scam artists are doing a job on our American people. And they were repeating it, and they look at it as a cost of doing business. And they'll go in another part of the country and repeat the same thing. This is the issue before you today. Take a few moments and share with the American people how you're protecting them from these scam artists who do it repeatedly.
I think it's a huge problem when someone can defraud people in one part of the country, get caught, and then set up shop elsewhere and almost do the same thing just with different names. I really want to urge this committee, we're going to do our part. We're looking more beyond fines, individual liability, more restrictions. We are setting up a registry to deter repeat offenders, to have better law enforcement coordination. But I think I would also urge all of you, and Senator Shelby, when he was on the Banking Committee, also raised concerns about the unfairness of the system when some people are held to account and others get off scot-free. I do want to urge you all to rethink and whether we should enhance some of the criminal liability provisions for some of these outright frauds.
And also, I was here, as I mentioned, when Congress gave the CFPB the authority to establish a registry of non-bank offenders in the Consumer Financial Protection Act. And tell us, why is it very important to include non-bank financial companies in any repeat offender rule?
Well, we already have a list of insured banks and credit unions. It's a finite list where we know a lot, but when it comes to the tens of thousands or more of others, we have much less visibility.
Thank you, Director.
The gentlewoman from Missouri, Ms. Wagner. Ms. Wagner is now recognized for 5 minutes.
Aye, thank you, Mr. Chairman. Good morning, Director Chopra. Yeah, let's talk some truth, and let's do it quickly with brief answers because I have a lot of questions here. Do you believe, sir, financial institutions should engage in risk-based pricing when making loans to their customers?
I don't think we should force it, but I think they often do because it's appropriate.
Should they or should they not? Risk-based pricing when making loans? Simple yes or no.
Again, I'm trying to answer. It's not to order them, but it is appropriate for them to be able to measure risk.
Yes, they have to measure risk in order to give a loan. Good. The credit card late fees and overdraft rules will make it harder for lenders to price loans according to the risk involved. Why is the CFPB writing rules that erode the fundamental principle of risk-based pricing?
Actually, won't it encourage better risk-based pricing? I'm not sure why making late fees in line with the congressional prohibition would undermine risk-based pricing. In fact, risk-based pricing, they have the data they need to price it more effectively. So I actually don't follow at all.
Then answer this, yes or no. Yes or no. Is there a strong likelihood that by drastically reducing the fee for paying late, this rule will actually encourage more consumers to pay their credit card bill late?
Well, aren't you, I hope you're aware that
Answer is
credit
yes or
cards-
no.
No, because credit
Okay,
card companies
really?
have the ability to raise your interest rates if you're late. They have the ability to
It will
garnish
not
your credit
encourage more
reports.
consumers to pay their credit card late? Really?
No, you're forcing me to say yes or no and not allowing me to clarify. So I like to give.
I'm going to clarify.
Feel free.
Really, if the point of the late fee rule is to reduce the penalty from $32 to $8, won't it be cheaper for the consumer to pay late?
No, so you are allowed to charge a late fee in excess of $8. The financial institutions needs to show their math. The Card Act bans unreasonable late fees. We are using an old formula to help them do that. They will still be able, don't worry, to punish their customers for paying late.
All right, let's talk about the CP's most recent Card Act report. It defines the term persistent debt as a consumer paying more for interest and fees on a loan than they are paying toward the principal in a given calendar year. And given that the credit card late fees rule will undoubtedly result in more consumers paying late, we're dropping it from $32 to $8, and therefore getting deeper into debt, isn't it true that your late fee rulemaking will cause persistent debt to increase?
Well, I guess I'd say this. Wouldn't you think that if a financial institution then raised the minimum payment, that person would then pay more, but they would be less likely to be in persistent debt? So
Director, your own rule indicates that more card holders will pay late. Your rule indicates that more
I
card
think you're
payers
taking
will pay
that out of
late.
context, but certainly we want to make sure that the congressional prohibition, respectfully, that bans unreasonable fees has fidelity.
Will you
We
commit
did
to
a
measure
10-year
the
look.
impact of the proposed rule on persistent debt and then require that the rule be rescinded if it does?
Well, it would be illegal for us to require a rescission in that way, but certainly in our biennial Card Act reports, we will always seek to study all of these
You
things
are
so that-
encouraging persistent debt
We're not.
and
We're actually
encouraging people
concerning
to
common
pay
sense.
late.
We're
Director
encouraging
Chopra.
common
So let's
sense.
go further. As part of the fee schedule charged by the CFPB for a FOIA request, the CFPB charges $23 per 15 minutes or $92 per hour if professional staff conducts a search for information, which may be a rate set by the Office of Management and Budget. $92 per hour to search for documents seems pretty darn high and very similar in concept to your definition of junk fee, which again you define as one in which the fee exceeds the CFPB's cost of searching and therefore leads to profit for the CFPB. Will the CFPB take action to examine this junk fee and reduce the amount charged for FOIA requests instead of profiting off of hard-working Americans who are simply seeking to learn about how government decisions are made within the opaque CFPB?
Yeah, I actually think those have only been charged 2 or 3 times in the past few years. It's very rare, but I will look at that.
It is not very rare,
The
sir.
Gentlewoman's time is
I
up,
don't
and
think
Director
actually-
Chopra, you can respond to Ms. Wagner's questions in writing.
I
if you
yield
may.
back.
I don't think
time's
that
up.
money, I think it goes to the Treasury.
Time's up. I would like to now recognize gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Madam Chair. Mr. Director, thank you very much for being here today and for your accessibility. Appreciate it very much. I do realize that you're not the agency you head is not a regulatory agency, but I and a few others have been involved with this American company, credit union, Navy Federal, and so I know that you also are aware of what I think should be an embarrassment to the federal government and to them, for that matter. They approved, as you may recall, 75% of all white borrowers and 50% of black and brown borrowers, and they had the same income as the minorities had the same income as the majority. And the disparity is just embarrassing. And I know, that this has not appeared in our history when we like to talk about, bigotry. But here, even in 2024, bigotry is still around, and it poisons our past, and it terrorizes our future. And so I'm still very concerned about what's happening. A number of us have met with the Navy Federal Credit Union, which, by the way, is the largest credit union on planet Earth. And they are larger than probably almost any bank that we're doing business with, except probably the top 10. And it bothers me a lot because we need, I wish, that you could be involved based on the statement you issued to the agencies that were reviewing the CRA. It is my strong and irreversible belief that you were right in your final, in the statement you gave to the final rule implementing the Community Reinvestment Act. You said it's time for state legislators to accelerate efforts to ensure certain non-bank entities have community reinvestment-like requirements, particularly in sectors where there is significant public subsidies or support for business activities. Credit unions are exempt. Bankers have been demanding that they be included since I've been here, which is 20 years. What say you on the whole issue about coming up with some kind of similar process to CRA that would be used in credit unions like Navy Federal?
Well, let me just say, I want to be careful. We do have enforcement authority over large credit unions, so I want to be mindful. But more generally, it's very hurtful to people when they think that even in serving in the military, working hard, serving their country, that they still may face discrimination. So we take this very seriously, and with respect to CRA, we have seen many states enact CRA for certain non-banks. Banks are required to do it, but many of those institutions that are not banks are getting a lot of direct or indirect benefits. And we should really see if a more level playing field is appropriate, that they too should serve. The majority of mortgage lending is now outside of banks. And so we should really look hard, whether by Congress or continued by the states. I think this is something, the banking lobby is no fan of the CFPB, but I think they would also agree that we should have stronger CRA requirements for other mortgage lenders that enjoy those benefits.
I'm 100% certain that they would agree with what you just said, based on my history with them. I just want to make sure that everyone understands that this is not a theory. We have the proof. 50% of the black and brown borrowers who apply for loans were turned down with the same incomes and debt-to-income ratios as the whites, who had 75% more. Thank you very much, Madam Chair. I yield back.
Thank you. I now recognize gentleman from Tennessee, Mr. Rose, for 5 minutes.
Thank you, and thanks to Chair McHenry and Ranking Member Waters for holding this hearing. And Director Chopra, thank you for your time and for being here with us today. Director Chopra, one of my top priorities this Congress, as I think you're aware, is dealing with the issue of abusive mortgage trigger leads. I'm curious, both from consumers and industry, how much have you heard and how much has the CFPB heard about this issue, and what are their concerns?
It's one of the top 3 or 4 issues I hear from mortgage lenders. They feel that they're working with a borrower to close a mortgage, but then all of a sudden that borrower gets dozens or hundreds of communications. The borrower thinks that the mortgage lender outed them in some way, and it creates a lot of friction. And many of the offers they're getting are sketchy at best.
Thank you. And Director Chopra, as you might be aware, Representative Torres and I have introduced the Home Buyers Privacy Protection Act. This bipartisan bill would limit the sale of mortgage trigger leads to financial institutions and financial technology companies that have a pre-existing relationship with customers. The bill would also give consumers the option to opt in for trigger leads if they choose to. Would you agree that based on the complaints that you've just characterized from industry and consumers, is it time for Congress to legislate protection for home buyers on this issue?
Yeah, I really support the goal of this. And in fact, this is another example of what I talked about in my opening remarks about even these trigger leads feel like privacy intrusions. This is a financial privacy issue. It directly relates to the Fair Credit Reporting Act. And we're really happy to work on both sides with you to figure out how we get some solutions. We are also working to see if there's any solution we can help to advance this issue, but it's always better when Congress can act.
Well, thank you, and I agree with that perspective, and thank you for your insights there, and hopefully we can, on a bipartisan basis, move that issue along. I want to shift gears a little, Director Chopra. 2 days ago, you proposed a ban that would remove medical debt information from credit reports. In your statement on the proposed rule, you highlighted that medical debt is, quote, taken on unexpectedly in a time of crisis, close quote. It is my understanding that the structure of this proposed rule would mean that medical debt information is defined as including elective procedures. To be clear, Director Chopra, if someone, for example, had an elective tattoo removal procedure and had failed to make their payments for that procedure, it would not show up on their credit report under this proposed rule?
So actually, we really talk to a lot in the healthcare industry about this, so I want to make sure we're using precise language. Elective can still be medically necessary. It just means that it's scheduled. It's as opposed to an emergency surgery. I think you're sort of referring to non-medically necessary or discretionary cosmetic. We actually looked at how that industry is structured, and we don't find that medical bills on credit reports really exist there because they are not insured and paid by insurance, and they tend to be paid up front or financed separately. So we're not really sure that that is something that would occur. I appreciate the point, though, and I think if you want to submit a comment to make sure that we think about that differently, I'm very open to that. But We don't really see that as an issue right now.
Okay, well, thank you for the clarification, and we may take you up on that, because I guess I would have a concern for non-emergency elective procedures in that.
Yeah, often they're paid, it's many ways in which we see medical financing or people being paid upfront in a way that is not sent to insurance, because those types of things are not covered by insurance.
And so your view is that if it's not medically necessary and therefore not probably covered by insurance?
Well, I guess I would put it this way. We have not proposed taking off or removing, when you use a credit card or other type of loan. The FCRA actually prohibits medical information on credit reports. So I think we're trying to adhere to that with some degree of fidelity.
Okay, thank you for that. 2 days ago, you proposed, in the remaining time, I'd like to shift gears now and talk about the Civil Penalties Fund. Between 2012 and 2022, the Consumer Protection Financial Bureau collected $1.3 billion. Last year alone, $1.9 billion. Can you explain how in 1 year the CFPB has collected more fines than in the past 10? In 5 seconds.
I don't think that's true, but I think we've allocated quite a bit. We have, in my tenure, we have collected several billion in fines, but we have allocated it to victims pursuant to the statute.
The gentleman's
Thank you, and I
time's
yield back.
up. I'd like to recognize gentlewoman from Ohio, Ms. Beatty, for 5 minutes.
Thank you, Madam Chair, to Chair McHenry and Ranking Member Waters. Thank you for holding this hearing, and let me first say thank you, Director Chopra, for being here, and it's always good to see you here and to listen to you as you explain all of the issues that we're addressing. But let me just make this comment first in light, Madam Chair, of how this hearing opened. It opened with saying, if this were a private sector meeting, what would happen? Well, let me also say this. If this were a private sector board meeting with board members on this side and board members here, we would not have had a director who has, over the time of his agency, delivered $20.7 billion to have waited. And certainly for the reason we were waiting in a private sector meeting, since the chairman opened with, if this were a private sector, what would happen? We would not have been sitting here as board members in a private sector meeting, waiting while other board members, Republicans, were meeting with Mr. Trump, someone who has been indicted with over some 88 charges. Then, Madam Chairman, it even got worse. And I'm only bringing this up because I think words matter. And when we have another chair of the Subcommittee of Jurisdiction here to use words like extortionist and to say that this director was the judge and jury and accused him of things that are not actually factual, that kind of grits at me. And to also question the credibility and to say that this director had no credibility. Now, that came from a member. I don't know what it was based on. You know, I was always taught when you do scholarly work or you say scholarly things, you have to have some citation. Well, let me just say what the United States Government Accountability Office said after doing their review, and this is a review of April 19th, 2024. In their review, they said a lot of things that are direct opposite of credibility. They felt that their work was done well, it was fair, they gave recommendations, most of the recommendations had been adhered to. So I think if we're going to talk about someone's credibility, we should have citations for that. So I just wanted to say that for the record. Because we have a lot of people who watch these hearings that haven't watched previously, have no history of the great work that this organization does. And I also want to applaud you, Director Chopra, for how you have dismantled the attacks on you and with intellect and with character. And I think you set the example of when witnesses come in that you don't buy into the attacks, but you simply told the truth. When you agreed with Republican statements, you said it. And so I think that that's a note being noted because it was also said that you were only here to do speech writing for the president and tried to imply that. And I know all of his speech writers. I know his communications directors. And let me just say, I think you're amazing, but that is not something that I know you do. So I just needed to say that more to the people who are watching, because sometimes you watch and you only see one segment. So I wanted to bring some fairness and balance. Now, with that, let me just say that I echo many of my colleagues in saying how thrilled we were with the Supreme Court decision. And now you can get back to the work of protecting the American consumers from harmful financial practices and putting money back into their pockets. So again, thank you, and thank you for continuing the work, because I don't think $20.7 billion is anything to sneeze at. I'd also like to thank you for your opening remarks on 1033. So let me start with that 1033 open banking rule. I want to commend you for advancing 1033 to ensure that personal financial data rights are protected so that consumers can shop and switch to better or more affordable financial solutions. And I also want to thank our ranking member because she has put this at the forefront.
With all due respect,
my
the
time is
chairwoman's
up.
time's up. Mr. Chopra, would you please respond to Ms. Beatty's question in writing?
Yes.
Okay, thank you. And I now recognize myself for 5 minutes of questioning. And Mr. Chopra, it's really good to see you again here before our committee. I know in your written testimony, you tout the tens of billions of dollars that CFPB has returned to consumers. But again, you failed to mention how persistent inflation has caused harm to consumers, especially for those lower income families that are having trouble meeting ends meet. I'm going to refer to New York Fed report recently. According to that report, about a third of balances associated with maxed out borrowers have hit a delinquency in the last year, and these are the borrowers using 90% or more of their credit limit. So can you point to any enforcement actions that are actually helping maxed out borrowers that are at risk of default?
Yeah, actually, many of those borrowers have low credit balances and are getting up to it. And they're often some of the people who are the lowest income people in our society. They're the ones where just a little bit of extra unfair fees or a little bit of a scam really can send them into a financial panic. So I closely monitor this data, and I really appreciate all the work being done to focus on them. I know you were a big part in fighting junk fees and leading legislation on that, so I want to thank you, Congresswoman Kim, for that. But really, we have to be focused on how those low-income people are getting by. So I really appreciate the question.
Sure. Are you saying that there is some of the maxed out borrowers are actually getting some money back to consumers in that way?
So we try, most of the redress that is administered is done by the companies themselves. So we typically order redress, and we do know that the types of cases we have been pursuing, they're not ones that are really focused on the highest income. They're the ones who are often the most vulnerable consumers. So we have looked at things in the automobile area, in the credit card area. Often those are the ones that I think are the consumers you're asking about. But we don't really do a matching in that way because there's some privacy issues around that.
I'm just pointing it out because I want the CFPB to really focus on addressing the root causes of indebtedness and the high cost of living. But let's switch gears to another matter. It's our understanding that your subject matter experts are collaborating on issues that include big tech in finance, artificial intelligence, and more with the EU through the informal dialogue. And you know that I sent you a letter regarding that informal dialogue, and our committee staff have told me that they finally had a briefing after about 8 months of requesting it. So I'm glad you did it. But can you commit to providing minutes of the meetings that you and your staff are having with the European Commission officials, as well as the list of subject matter experts involved in your foreign policy dialogue?
I apologize for the delay. I think it's because those meetings did not really occur until much later. There was 1 or 2 meetings with me and European Commission officials. I participated in something related to financial literacy. I think,
Okay, then
Congresswoman,
let me reclaim my time.
well, I just
Can
want
you-
to say, I think we've posted
Yeah.
the information publicly, but I will go ahead and check to see what we've posted.
I
But
just
think
want
we
to
wanna
get
be
your
transparent.
commitment that you will not export or embrace the EU laws in the form of U.S. financial consumer regulations. Can I get your commitment?
That we won't export U.S.?
Yeah,
I mean, I actually think the way the U.S. does things, we should not be cutting and paste China. We should not be cutting and paste Europe. If anything, I
I'll
think we
take that
should
as
be
your commitment
promoting
that you're
a
not
lot of the
going to
way that
export
the
any
U.S. promotes competition and
Okay,
privacy.
thank you. The CFPB also released interpretive guidance related to buy now, pay later loans on May 23rd of this year. But I am deeply concerned that this is another example of the Bureau exceeding its authority by effectuating a substantial policy change through interpretation or enforcement. So do you agree that a substantive policy change in how the Bureau regulates an entire class of financial products requires a former APA rulemaking? And can you commit to using former rulemaking for any change in the Bureau's approach to buy now, pay later?
So my predecessor, Director Krandinger, started the advisory opinion program to provide interpretations. I think a lot of companies want to know, how does the existing law apply and what should they expect? So we went through a process to do that, and I think it was welcomed by many. But I'm happy to talk to you further about it, and it's also
I want to be
open for
respectful.
comment.
My time's up too. So let me now recognize gentleman from California, Mr. Vargas, for your 5 minutes.
Thank you very much, Madam Chair. I appreciate the opportunity. I want to thank the ranking member also. Director Chopra, it's a pleasure to see you again here. You know, when I first got on this committee, it was Dodd-Frank that was the problem, according to my colleagues on the side, and they said how illegal it was, how terrible it was. Now, of course, I listen to them, and it's the gold standard. You know, they say, we don't need anything beyond Dodd-Frank. It's the gold standard. Then they started picking on you. In fact, I was going to ask you a couple of tough questions here. One, do you remember all the insults that you received because of the funding aspect of CFPB? That's a question, sir. Do you remember some of them?
I certainly remember some of the harsh things said to me, yes.
And in fact, I found it interesting because it seemed to me, as the court said clearly, that the funding is well within the appropriations clause of the Constitution. In fact, fits clearly within it. They had to go forum shopping to the Fifth Circuit to find a circuit that would say it was illegal because this was so right down the middle. In fact, it is interesting, 7 of the justices in a very conservative court decided this was right down the middle. This wasn't even a hard decision for them.
Yeah, Justice Thomas's opinion really spells out how this is completely consistent with the Constitution. That those pauses, though, had a real harm to consumers, though many of our litigations, many of our work was just stopped. And, you know, justice delayed is often justice denied, but we're going to keep going to make sure those consumers get their redress.
Well, in fact, since you've mentioned it, let me ask you this. You said it was claimed by the other side that you have no credibility. The CFPB, what is your approval rating?
I don't know, but I think we serve consumers in every single neck of the woods of this country.
Well, I can tell you because I've looked it up. It hovers around 78 or 80%, sometimes even higher. Do you know what our approval rate is? And again, you're not under oath, but you have to tell the truth.
I don't.
Because do you think it's higher or lower
I
than
do
that?
believe it's higher because our...
Do you think that ours is higher? Our approval rating is higher?
believe the
What have you been smoking today, Mr. Director? Ours is not higher. That's the only time I've ever disagreed with you here. No, ours is very low. It's about 13%. About 13%. So when we question your credibility or the credibility of the Bureau, it's ridiculous. It really is utterly ridiculous. And also it reminds me of 1994 when they brought the tobacco people up and they said, hey, is it addictive? Oh, no, it's great stuff. You ought to give it to your kids. It's the same thing with these junk fees, with these late fees. And I hear my friends say, oh, that's good for consumers. They love the late fees. They love all these junk fees. Do consumers love the late fees? Do they love the junk fees?
I think consumers are sick and tired of surprise or unfair fees that are creeping across the economy, and it really hurts those who can least afford it.
Of course, and in fact, we get complaints about that all the time. And we give praise all the time for your work now, but I do want to talk about one thing specifically now that I got that off my chest, because I listened to all the BS all these years about the funding, it's illegal, it's this, hair on fire. And of course, Supreme Court didn't even break a sweat and said, hey guys, it's right down the middle. This thing is easy. This is not a tough one. I do want to ask about remittances. I do think that there's problems with the remittances. I do think there's a lot of hidden fees there. People work very hard to send that money, oftentimes to families that are impoverished, and this is a way out of poverty for them. And I think it's very unfair the way the system is set up. Could you speak to that? And I know we've been working a little bit, but we need to do more.
I agree. We need much more cheaper and faster and safer remittances. We have taken a number of enforcement actions against those who violated the law. There is often marketing that says it's free, but in fact, the exchange rate is being manipulated. It is very hard. I would like to see more in the banking industry participate in some of the Fed's programs to help people send money. This is also an important national security issue as well.
I agree. My time is almost up, but again, I wanted to thank you. I think you've done a hell of a job. I think you've done a really good job. Now that you've got the ability to go forward without all the nonsense about the illegality of the things that we passed, by the way, it's not you. You don't set up the funding mechanism we did. We were attacking you and we're the ones that did it. But I do hope you go forward quickly because we have delayed justice. Thank you. With that, I yield back.
Thank you. I now recognize the gentleman from Wisconsin, Mr. Stile, for 5 minutes.
Thank you very much, Chairman. I thank our coach of the Republican baseball team for his graciousness in letting me jump him in line today.
Winning
while
coach.
Celebrating your win. Mr. Chopra, I have significant concerns as it relates to data privacy at the CFPB. And last year, the CFPB had a major data breach of 250,000 consumers. I have an article from the Wall Street Journal dated April 19th, 2023, that describes a CFPB employee taking consumers' confidential information and emailing it to a personal account. The headline is CFPB says staffer sent 250,000 consumers' data to personal account. I ask unanimous consent to insert that into the record. This individual also stole confidential supervisory information on 45 banks, which could be market moving. The CFPB has a pilot program as it relates to auto loans. And if the CFPB, under this proposal that you're moving forward with, is looking to collect over 120 data points from around 4,000 auto lenders. Some of the data points include borrowers' income, credit score, zip codes, how much they paid for their car, and their interest rate. And if implemented in full, as you're potentially proposing to do, it would cause significant data collection efforts with major compliance costs, but importantly, with privacy concerns. There's about 100 million car loans in the United States. So that means your project threatens the privacy of millions of families, and the Bureau doesn't have a good track record on protecting our data. Can you claim that the data you're using is anonymized? But you claim that. But as recently as last month, you admitted that anonymized data can be re-identified. Can you give the American public 100% confidence that in the collection efforts that you're making, when that data comes to the CFPB, that their personal and private information will be protected?
Yeah, well, we solicited comment on this. I think we got a question from Congressman Barr about...
But I got you. We can come back to the broader issue, but what I'm asking you writ large is, in this, and this is the question I think is really important in why we should have this dialogue, is can you guarantee the American people that if you collect this information, that their information, including their income, their zip code, the car they purchased, will be secure?
Well, so
we don't have a good track record of this.
Well, we take very seriously.
I understand you take it seriously, but can you
misappropriation of
can you tell the American people with
May I
100%
finish?
confidence that
May
you'll
I finish?
protect it?
I'd love to answer the question. We want to make sure that when we collect any data, we are doing so in ways that eliminates or dramatically reduces, wherever possible, any chance of any data protection issue. We're heightening our ability to assess that, because it is true with more algorithms, more AI,
Yeah, well,
those concerns.
I got you. So in other words, you're heightening it, but you can't guarantee the American people that there's not going to be a breach.
We haven't done it. So
But we have incidents where 250,000 data points.
we haven't done the auto data collection
Yeah,
you
but
mentioned. So
I hope you see the concern that the American public should have. And then let's look at the auto dealer side of this equation. And so you'd agree that the CFPB requests dealers zip codes. And most of these zip codes, say an individual goes and buys a car in Delavan, Wisconsin, zip code 53115. There's only one Ford dealer. There's only one Chevy dealer. And so you can unanonymize that data, but if you go back and we look at US code 125519, you don't have the authority to regulate auto dealers. But in effect, you're really operating in this proposed rule as a backdoor mechanism to actually regulate auto dealers, because in any given zip code, you can actually identify where the auto loan is made, correct?
This is not a proposed rule. We're trying to survey the market of a $1.6 trillion market. I do not know if we will proceed with it. We do not have authority to bring enforcement actions against auto dealers. So I want to do everything I can to assuage your concern about this, but we have not done this auto data collection, but it is the biggest market for which there is not much information about trends other than some credit reporting data. So we're happy to take your concerns. We don't even know if we're doing it, but that is why
I hope you understand the concern. I think the concern that millions of Americans would have, because the track record of the CFPB, along with a number of federal government agencies, is abysmal as it relates to data privacy.
Well, I take that very seriously.
I hope you do, because you can't guarantee that this information won't go public, and it holds 100 million
we don't
Americans
collect personally identifiable information in these things, but I take your concern very seriously.
I appreciate your time, Director.
Thank
Madam
you.
Chair, I yield back.
Thank you. Wow, thank you, Director Chopra, for sitting with us for almost 2.5 hours. I think it's time that we take about 5-minute
5 minutes.
break. Yes, hopefully that will be enough for you to take a bathroom break. And for the members, we will resume with the hearing in about 5 minutes.
Committee is back in session, and I call on the gentleman from Illinois, Mr. Caston, for 5 minutes.
Thank you, Mr. Hill. Director Chopra, always lovely to see you here. It's several of us have said it, but I do just want to apologize for the delay. We had a 40-minute delayed in start in the official business of the House because my colleagues were all at a political event off the Hill. It's disrespectful, but you deserve better. I don't know what they spoke about there, but I strongly suspect it was not about endorsing and celebrating and effectuating the rule of law as passed by an independent judiciary. And I say that because while I think we're all happy about the recent ruling by the Supreme Court protecting your funding, I don't want to rest on my laurels. I want to read you a quote, the Heritage Foundation's Project 2025 that aims to be the blueprint for the next government should the Republicans take over, says, and I quote, "Provided the Supreme Court affirms the Fifth Circuit ruling holding in Community Financial Services of America, the next conservative president should order the immediate dissolution of the CFPB. Until this can be accomplished, however," obviously that didn't happen, "Congress should require that no CFPB funds are spent on enforcement actions that are not based on a rulemaking that complies with the Administrative Procedures Act." Can you speak to what would happen to consumer protection in this country if Congress were to carry that out?
Well, I think eliminating the CFPB would be chaos. I think the mortgage market would suffer. I think all of the innovative companies that rely on a sound marketplace, and most importantly, the consumers in every part of the country would then be greeted with more unlawful practices. That doesn't just harm them, that harms the whole marketplace.
Well, we're always grateful for your consumer protection, and I wish it wasn't so partisan. I want to shift to a separate issue, hopefully not partisan. In October of 2023, at a Brookings Institution speech, you talked about tech firms blurring the lines between payments and commerce, engaging in bank-like activities while not actually being regulated as banks, and the sort of broader sort of need to maintain a separation between commerce and banking. There's recently been a number of large brokerage firms, one in particular, that are talking about entering the credit card space, where they're both issuing brokerage accounts. You have a brokerage account, they issue a credit card space. I guess I'm wondering, are you paying attention to this, and do you have any concerns that we should be vigilant
Well,
against?
certainly they are not exempt from the consumer financial protection laws. But you're right, there is a lot of issues now with firms that are entering consumer products, and we're seeing this right now. There's a very chaotic and disturbing situation where people can't access their funds. It needs to be clear whether you have an insured account or not, and often the blurring between big tech firms and banking, I think, is actually really causing some confusion and issues that Congress and the CFPB really need to address.
Okay, so I want to get a little bit specific. Robinhood Financial, we've talked about this before. Alex Kearns was a constituent who took his life after being falsely told that he was upside down on an options trade, and I think his note said that he doesn't know why he was allowed to trade options when he only had $5,000 to his name. Robinhood is now talking about issuing these credit cards to their gold members who can trade on margin, and I think the obvious concern that raises is if you're getting the data that you would have as a credit card firm that can identify people who are prone to risky behaviors, and you are selling something that's attractive to people with risky behaviors, do you have the tools to protect that in advance, or do you have to wait for some violation that you can pursue a compliance action against?
Yeah, I don't think we can. I think that for broker-dealers or brokerages, securities, they have to follow securities laws, and in as much that they are doing consumer lending, given our current status of privacy and protection of financial data, it's pretty weak when it comes to that type of sharing. So I don't think we would have the tools to really stop it in advance.
So you're saying that wall between commerce and banking
has eroded.
Can be breached, and it's not until you're violating the spirit of those laws that you can.
Yeah, I think I would need to check under the securities laws about whether there could be some limitations, but my understanding is that data, if it's disclosed in that notice, it can be transferred back and forth.
Maybe we have some work to do legislatively.
We do,
Because it troubles me given some of the past behaviors if we're chasing on the back end. Well, thank you for your time. We'll follow up offline and yield back.
Gentleman yields back, and it's a pleasure to call on the winning coach for the House baseball contest between Republicans and Democrats in continuous play since 1909. Roger Williams is recognized for 5 minutes.
Thank you, Chairman, and thank you, Director, for being here today. And you and I have reminded each other I'm a car dealer, so I have a lot of interest in this today. So good to see you. I have concerns, however, regarding your plans to establish a non-bank registry for so-called repeat offenders. And I'm concerned how you plan to use the information obtained and put it in this registry. The registry appears to be misguided and a misguided effort designed to increase the CFPB's supervisory and enforcement powers by leveraging state laws and orders over which the CFPB, frankly, has no authority. Additional supervision by the CFPB is unnecessary. It harms consumer protection efforts and wastes the agency's resources. So the proposed registry is a solution in search of a problem. Now, my question would be, Director, how do you justify the need for additional CFPB supervision when state agencies already have robust enforcement mechanisms, and why are you trying to do the state's jobs for them when your agency has no such authority?
Yeah, so we're not doing additional supervision. The Consumer Financial Protection Act asks us to register non-bank companies. So I think that was originally contemplated as registering auto or payday or credit, whatever it may be in the non-bank sector. We've taken a much more humble approach and focused on the frauds and scams and repeat offenders. So all we're saying is that if there's a public enforcement order, that has to be reported to the CFPB. This is going to allow law enforcement to really cooperate together to be able to see if there is misconduct, criminal behavior moving from state to state, and I think it will help us stop that. We're not really creating new supervision. We do not enforce state law. States enforce state law, but I do think this is important law enforcement cooperation. We've seen this in many other contexts.
In January, the CFPB proposed a price cap on overdraft fees. Overdraft services are very popular, as we all know. A recent survey found that more than 2/3 of consumers find that their bank's overdraft services are valuable. In that same study, 8 out of 10 consumers who paid an overdraft fee were glad that their bank covered their overdraft instead of rejecting the payment. So overdraft is a tool that allows consumers, and has for a long time, flexibility during times of emergencies or tough financial situations. Should you move forward with these regulations, however, many banks will be forced to stop overdraft fee services to their consumers. So question, Director, why is the Bureau trying to regulate this product to death, disproportionately impacting those who have limited access to alternative liquidity options? And furthermore, what are source of short-term liquidity do you expect consumers to use if they don't have this overdraft fee?
So respectfully, and you know I like you on this, but it's not right that there's a price cap. What we've proposed is that if banks, and they want to make, if large banks, we've exempted all the small ones, if the large banks want to make money on overdraft loans, they should disclose it just like they would disclose a credit card or another loan. That will allow consumers to compare. We have essentially created an exemption if they're charging a reasonable amount below an industry average. That will allow them to make choices. Are they going to offer it as a convenience, or are they going to offer it as a loan? We revisited a 1969 interpretation on this, and I think we think this brings more competition, more choice, and the ability for people to really look at a credit card or a line of credit or an overdraft loan to be able to compare what's best for them.
Okay. In the time I've got left, there's nearly 900 pages in the final rule on Dodd-Frank Section 1071 is inherently overwhelming. Small businesses lending is already a complex environment with many different channels and types of credit. The rule is finalized creates confusion for lenders across the board who are a critical lifeline for our nation's small businesses, much like mine. And in addition to creating confusion with respect to the collection and reporting of the data, the rule itself lacks substantial information about how the data will be used once it's reported and what safeguards will be put into place by the Bureau. So, Director, under your leadership, you've gone after big tech for their data practices. What about the Bureau's data practices? How will the Bureau ensure transparency for small businesses regarding the use and protection of their data?
Yeah, we need to make sure that this is much delayed. We're not going to see reporting for a while. but certainly with respect to how that data is handled, I'm actually really happy to talk to you more about how we're thinking of making sure that we can protect it and that we're not going to lead to, we know that small business is totally different than mortgages, and we're going to have to pay real close attention to how we handle it.
Yeah, small businesses is very stressed right now. I yield my time back. Thank you.
Thank you, sir.
Gentleman yields back. The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Director Chopra, for joining us today. And I just want to make it clear that we Democrats were here because we believe in your agency. We applaud the Supreme Court decision, and we love the work that you're doing. So thank you so much for being there to stand up for consumers. And for me, I want to just particularly thank you for the work that you've done with the Think Finance, the Texas online lender. You returned back $384 million. $384 million, even for Texas, that is not chump change. Think Finance has illegally collected loans that were void under Texas state laws that govern interest rate caps and lender licensing requirements. The company misrepresented to consumers that they were owed money on these loans, made electronic withdrawals from their bank accounts, and even sent them demanding letters. I think more people need to understand you are the only federal agency created with the sole purpose of protecting consumers. And for the record, I Googled it. You have a 79% approval rating. And yes, Congress has a dismal 13%. So your credibility is high, the public does love you, and you're doing the work that your mission statement has demanded. So I want to also, I have a few other questions, but I've submitted them in writing because I was concerned with you not having enough time to clarify the question from one of my colleagues about whether or not immigration status can be considered when reviewing an application for credit. And you said something about national origin, you said something about immigration status, and for everyone that's listening, can we just be clear on what the guidance did say and did not say?
Yeah, immigration status can't be used as some sort of pretext to discriminate against people illegally. We're really worried when someone uses a type of characteristic to discriminate against a whole protected class as a ruse. So what the guidance made clear is that national origin discrimination is one of many protected classes that is illegal to discriminate against under federal law. And while the guidance doesn't say you have to lend to a certain person or not, when you use immigration status in a way that is pretextual to discriminate against a certain group of people that is protected under law, that's illegal. And I think we want to make sure that lenders are doing it in a careful, risk-based way and not just a way to exclude a whole category of people that are protected under federal law.
So their application should be reviewed just like any other consumer.
Correct. You shouldn't
They
be able.
cannot simply look at it and say, oh, no, they're not U.S. citizens. We're not even going to look at it.
Yeah, it's one of many factors, and it should be done with care so as to not be so broad that it just automatically disqualifies a whole group of people who have protections under federal discrimination.
Right. I think the words that you all use in the guidance is the creditor's rights regarding repayment, unnecessary or overbroad reliance.
That's exactly right.
All right. So if anyone were to suggest that you said that it was okay to consider immigration status, would they be correct?
Well, you can use immigration status. You cannot use it in a way that is so overbroad that it ends up discriminating against people based on a protected characteristic under the Equal Credit Opportunity Act. That's what the Justice Department and the CFPB tried to articulate. And it is true that there are some cases where people will use or look or assess different characteristics. It can't be done in a discriminatory way against a protected class.
Oh, well, thank you for that. Now, I'll just ask you another a quick one. The rule related to the remittances that you recently or was it a guidance? I
Yeah.
forget. Could you just briefly tell us what that
Well,
says?
we're really worried when remittance companies claim that they're offering something that is free. But in reality, it has real costs, including through, how they deal with the currency exchange rate spread. So it's really important that consumers be able to know the costs of how they are going to pay a remittance. And we need to do more to offer a competitive, cheap way, especially using digital technology.
Correct. Well, the other item that I have on my list is when you talk about the fraud towards seniors, we need you to look
The
at
gentlewoman's time has expired.
funeral home insurance. Thank you.
Gentlewoman yields back. Please be responsive to her question in writing, Director. Director, I'm yielding myself 5 minutes for questions. Thank you for being here before us to answer the committee's questions. We always are grateful for your visits annually or more frequently as needed. Can you provide for the record to me in writing, not try to rattle it off, under your statutes that you're responsible for as delegated to you by Dodd-Frank, which ones go through OMB review? Or can you testify today that all regulatory rulemaking proposals issued by the CFPB don't go through the OMB clearance process?
There are aspects.
It's a mix, isn't it?
Yeah, there is a mix. There's aspects of our rules that do go through, I believe, the Office of Information and Regulatory Affairs within OMB. I can't say for exactly.
Would you just submit for the record,
Yeah,
educate
sure.
me on
Sure.
what does and what doesn't as it relates specifically to your
Sure.
agency?
Sure.
Because that's, I think, important for our work. It allows us to be a better judge of APA compliance by the agencies under our oversight jurisdiction. But you would agree that CFPB, you would consider it an independent agency?
Yeah, so the way in which our enforcement supervision is really totally independent, we go through a process to make sure that there is any unnecessary interference in our enforcement.
Yeah. So that's why I wonder if it's then appropriate for you to associate yourself by coordinating, 4 or 5 months out from an election with the White House for a press rollout of a new proposal on medical debt. Do you think that's in keeping with your role as an independent regulatory agency?
Well, it's certainly consistent with my predecessors. One of the things that has been a better part of what we've been doing is coordinating broadly with other agencies. So for example, some of the work we're doing on data protection isn't just going to impact consumers. There's some real national security equities there. So a lot of what we do is in coordination, and actually we're required under our statute to be in coordination. And let me just say, Congressman Hill, if I will stand with any of you who wants to join me in celebrating the successes of the CFPB and what we're doing for consumers.
Thank you, Director. Always smooth in your answers. One of the ways that the CFPB was insulated in a big picture way, of course, has been debated here recently and gone before the court about the way the agency's funded. Can you state for the record how Dodd-Frank directs that the CFPB should be funded on an annual basis?
So the CFPB is a unit of the Federal Reserve System. So we are funded a very similar way that the Federal Reserve Board of Governors, except we are not able to set our budget. I can request to the Federal Reserve Board transfers from the Federal Reserve System in the same way they transfer monies from the Federal Reserve banks to fund their operation.
But you do set that amount. They don't set the amount, right?
Well, actually, Congress sets the cap on that, and we have stayed below that cap.
And what is that cap?
We've been going through budgeting for the future, but I believe that it is set in statute, and then there is an index called the Employment Cost Index, ECI. Maybe that's the wrong acronym.
But is it a cap of a percentage of what, the Federal Reserve's earnings?
It's basically a hard number that is adjusted by that index year by year. So it doesn't vary based on other performance. It's sort of a set number with a cost inflator.
When was the last time the Fed showed a net profit? Do you know that number?
Yeah, so the nonprofits and government agencies, they don't report profit and loss in the way a private
No,
sector
but they
company
promote
would.
positive or negative cash flow. So when was the last time?
Actually, cash flow is a totally different indicator.
Okay, let's not, when was the last time there was a net positive result from the Federal Reserve? You know, the last time they generated a positive earnings?
I think the Federal Reserve Act would call it excess earnings.
Okay, when was the last time they had excess?
I believe that was in at the end, early 2023 or late 22. I can't remember the exact point. But again,
So
that uses different
That's true.
terminology.
That's true. September 2022. So good analysis on your part. But since then, the Fed has actually had a deficit in earnings of $172 billion.
No, that's not true. If you look at their audited financial statements, again, just like in the private sector, nonprofits use different accounting terminology.
Yeah, but we're not debating that today.
Well, if you look at, I'm happy to supply you their audited.
Oh, I get it. I read it. I know what it says, and I know it's running a deficit. And therefore, instead of sending money to the Treasury, they're crediting a contra account of the Treasury. My point is that when you ask for funding, you're asking for that on top of their losses. I yield back, and Mr. Davidson, I recognize you from Ohio for 5 minutes.
Thank you.
Thank the chairman. Director, I thank you for your work, especially on privacy. We've had, clear disagreements on all sorts of policy matters, not to be unexpected given the nature of the appointments and all that. But I've really been encouraged by your commitment to privacy, and I hope that we can make that truly bipartisan. We've had important wins on the Fourth Amendment's not for sale. We got a very much the spirit of what you're talking about with data brokers and their abuse of the Fair Credit Reporting Act with that. And it was 123 Republicans and 96 Democrats. It was one of the things that broke differently than pure partisan lines. And so I hope you continue to be a voice for that. As you know, we're working on the Payment Privacy Act. We highlighted it at your last appearance. It's very complementary to the 1033 process that you've been undertaking, and I appreciate your collaboration and feedback on that. And I just thought I'd offer you a chance to offer anything else about the concept of the Payment Privacy Act, and appreciated your dialogue with Chairman McHenry at the start of the hearing.
I think that being able to know all of our individual payments and transactions without our permission, or really just happening in the background, I don't think this is just sort of a question about fairness in the economy. I think this has some very real questions about individual liberty and freedom. I'm very worried about the potential for financial censorship and the ability for others to have more control over us, including by manipulating us in some ways. And I think this is a big concern, particularly when countries of concern can get this information, and they do that through data brokers.
Yeah, thank you for that. And in the financial services realm, we're used to things that maybe in energy and commerce they're not used to, because apparently in the FTC, if you put it in the terms and conditions anywhere, you can do pretty much whatever you want. They don't really even have the wherewithal to understand what's being put in the terms and conditions, let alone hold companies accountable for delivering on those and not breaching them. Here in the financial services space, on the other hand, even if you really want to put in the terms and conditions, there's certain things you can't do. And I think one of those has to be sharing someone's private information, their data, without their consent. And even if it's compelled in these ways, I think it's important, and I think that's the spirit of what I think you're trying to do there. I hope we can continue to collaborate that. Director Chopra, CFPB's recent larger participant rule proposal covering general use digital wallets is kind of an expansion of the space in a sense, but I do believe one of the most important consumer protections we could have is self-custody, the ability for people to host it's a protection of private property. They should have no fear that the government would take that, except the government continues to try to take that under both Republican and Democrat administrations. FinCEN's targeted that. What's your thinking on this, and why do you believe CFPB should be able to focus on this?
Yeah, one of the reasons we propose this is we're seeing a lot more big tech companies, other tech firms entering into payments. Our jurisdiction is really consumer payments. The Electronic Fund Transfer Act, other consumer protections. We're really not trying, we're not expanding. We just want to make sure that where there is already our enforcement jurisdiction, we have some ability to make sure that when it comes to fraud, privacy, and other issues, there's some consistency between bank and non-bank. I will share with you that the Fair Credit Reporting Act is one of the most important privacy laws in the country, which has real restrictions on use, and I hope that both sides can figure out how to do something as it relates to these payments.
Well, I share your concern and really enjoyed Mr. Vargas's commitment and cast in talking about remittances and protecting consumers in that way. When you look at digital assets, self-custody is really the epitome of it. It's permissionless peer-to-peer payments that are being protected. In that sense, they're private, they're secure, and they're protected from third parties doing anything with them. And so I hope that we can stake that out as a common ground that we defend. It'd be great to see bipartisan support for the Keep Your Coins Act as an example that would protect that. One area that I am concerned on, especially given the protection for privacy that you've espoused, is this auto loan data collection. I mean, you say that you're not yet committed to go with that when you're talking to Mr. Stile, and I appreciate that. Nevertheless, the pilot's underway, and it's collecting lots of stuff. I don't know why, if you buy a car, someone needs to know not only the income things that he's talking about or zip code you live in, but race, gender, ethnicity, sexual preference, all kinds of things like that. It seems kind of creepy and spying. How do you reconcile that?
Yeah, so none of the work we've been doing has sought to collect additional information from borrowers. It's already what's in the system. But you and I should talk about it because I think we are not committed to proceeding with this, but we do want to make sure that we have some data on the auto loan market, which is now $1.6 trillion.
An answer in writing, Director.
Time has expired, and I yield back.
Gentleman yields back. And I recognize myself for 5 minutes. Director Chopra, nice to see you. I do want to focus on some things that we've talked about in the past, some of the ideology, I believe, out of the CFPB, and some examples of some overreach and even some unwillingness to listen to industry feedback, which I think is extremely important. I continue to hear from banks, large and small, super regionals, community banks, that some of the activities and regulations that are coming out of your agency are burdensome and not helpful. In fact, very duplicative at times, what they already doing, just it being done differently. So I want to just start with on cost-benefit analysis, which we've talked about in the past. It's an important part of a rulemaking process. It's important to understand how your rules hurt businesses or help, and subsequently their customers. So can you walk us through a little bit your rulemaking and how you take a cost-benefit analysis into consideration and the sort of outreach and information that you take in order to make the best rules possible?
Yeah, so we try, obviously, to make sure that we're looking analytically at any type of potential rule or intervention we're taking. I mean, it's not good if there's not more benefits. Now, I will share this. Sometimes we also get feedback, just like the last question I got from Congressman Davidson. Don't collect this data because of burden. So sometimes we like to rely on existing data that we have or third-party data that has been published. So we always subject that to public comment. And where we do get additional submissions of data, we look at that very carefully to see the methodology and how we would factor it in. But we absolutely do comply with all the requirements and go beyond that.
You must get some feedback, as I do, that your comment periods aren't always adequate. And in what Chairman Williams brought up regarding, you kind of made a remark regarding the time frame for the auto industry requirements to be very minimal. You said 20 minutes. Now, I know you didn't mean that cumulatively, but that didn't seem like an understood response. That most of the industry disagreed with your figure in that case.
Yeah, and we have made no decision on that one, and we're going to look at what we said. What I think is different about auto compared to, say, what companies have to do under federal law for mortgage, there's no new data collection requirement. I think we're trying to find a representative sample to get insight.
But again, taking feedback from...
Oh, we are, and we certainly subjected it to that.
So, I'm going to ask you about this. You've had some press release and tweets. I can't say exactly when, but they exist, where that came across as a very kind of mean-spirited, perhaps malicious, phrases such as you referring to industries or sectors as cartels, as liars, as deceitful, sometimes in reference to entire industries, or at least that's how it was interpreted. Do you believe entire industries in the financial services marketplace should be tainted in this way, described in this way?
We haven't done that. And in fact, I will say, though, the LIBOR rigging and cartel cost all of us billions and billions of dollars. Okay. That was a serious offense that was also had raised criminal issues. So yes, that was cartel-like behavior, and it was totally inappropriate.
That's not really how it came across. And
well, I welcome you to share with me that, because that's what I remember.
Is there an industry that you think does treat its customers well?
Oh, a competitive market treats that's what we want. We want people to compete on treating people well, giving them a good product at a great price.
You and your staff have referred to banks as being similar to a utility. Do you believe in the competitive marketplace of tens of thousands of banks and credit unions, or do you see them more as a utility that needs to be run by the heavy hand and high regulations where the banks already have, such as a utility is?
No, I think what we've said is it's critical infrastructure for the economy. So I don't think people fully appreciate if the banking system isn't working, nothing works. It's as important as the electric grid or the transportation network. So it's so important, which is why we need to make sure it is always working, always on. And when there are risks to the financial system, we have to safeguard against
My
it.
time has expired. I appreciate the clarification. Now recognize from New Jersey, Mr. Gottheimer for 5 minutes.
Thank you, Mr. Chairman. Director, thank you for being here. I want to start off with some great news. When you were here last in front of this committee in November 2023, you committed to investigating the revenue that financial institutions were making off of the outrageous congestion tax in New York. I'm glad to let you know that the MTA has, in a flash of common sense, put an end to the congestion tax cash grab. That's one investigation off your list. Thank you for your partnership in that effort. You can celebrate if you want, or we can do it later if you'd like over a beer. Switching gears, like you, I share the objective of protecting consumers from harmful practices. Are you familiar with crisis pregnancy centers or CPCs?
Yes, I don't have deep knowledge, but I'm aware.
CPCs offer a masterclass in deceptive anti-choice marketing, often misleading women in an attempt to block their access to reproductive health care. That's why watchdog groups have called on our federal government to investigate these centers for deceptive marketing practices. Director, you understand consumer fairness perhaps better than anyone else in this room. Will you commit to using CFPB resources to look into this issue and to protect consumers who come into contact with these centers, especially women?
Well, certainly, they are not a financial provider, so it'd be out of our jurisdiction, but inasmuch that there are deceptive or unlawful claims, there are agencies in the federal government who do have jurisdiction, and of course, we always want a marketplace where advertising claims are truthful.
I think in this case, I'll follow up with you. There's some financial crossovers, and I'd encourage you to look into this issue and hold these centers accountable for deceptive practices and disinformation. I'll follow up with you if that's okay.
Of course.
Thank you. Director, I'd like to talk to you about coerced debt, which occurs when the abuser in a violent relationship obtains credit in a survivor's name through threat, force, or fraud. Far too often, women survivors are the ones targeted in these situations. Right now, a cardholder can't be removed from a joint credit card account unless both parties agree to terminate the account. Has the CFPB looked into solutions that help survivors take their name off joint accounts without penalties?
Yes, so we have actually completed a rulemaking under the Fair Credit Reporting Act regarding survivors of human trafficking. That's one of the best examples of coerced debt. We really do see this also for those who have suffered from domestic violence or other types of relationships where they might incur debt that they did not even seek. One way that a bad actor can really keep control over someone is when they are financially paralyzed, and destroying their credit report with unpaid debts is another way that they can maintain that control. So I would really urge us all to think about ways the Fair Credit Reporting Act can also be used to stop not just abusers, but or protect survivors of human trafficking, but also those who have been subject to domestic violence.
No, it's a big issue on the domestic violence side. I hear often from many women have told me that they are scared to leave a relationship, or they can't because financially they just can't get out from the financial abuse.
We would really like to work on this with you. There was a bill that came out of this committee about survivors of human trafficking. The CFPB implemented that rule pursuant to the deadline. I think we can consider more work on this.
I'd really like to work together with you on this issue. We need to ensure survivors have the support they need to rebuild their lives, and I would be honored to work with you on that. According to the FBI's 2023 Elder Fraud Report, seniors had more than $3.4 billion stolen from senior scammers last year. What is the CFPB, if I can ask, doing to crack down on this staggering fraud?
Well, elder financial exploitation has always been something that I've been worried about. We are looking to find ways to partner with industry and others to detect some of these scams. I'm actually really worried about the use of generative AI here, where someone's voice can be cloned and they can make a call to an older adult. There's really no way for that older adult to distinguish it, and it can often lead to very serious harms. I'd like to see the banking industry also step up when it comes to older adults who are suspiciously sending major wire transfers to scammers.
I agree. In fact, I'm leading a bipartisan Empowering States to Protect Seniors from Bad Actors Act with my friend, Representative Nunn, to equip states with the support they need to address scams. It's a critical issue, and I believe this legislation will be a valuable tool in the scam response toolkit. Thank you so much, and I yield back.
Gentleman yields back. The gentlewoman from Texas, Ms. De La Cruz, is now recognized for 5 minutes.
Thank you, Mr. Chairman, for holding the hearing today, and thank you, Director Chopra, for appearing before us. The CFPB was created with a special mandate to guard against consumer harm. However, it seems that many of your rules written are specifically penalizing our small financial institutions that serve local communities like mine. My community is largely Hispanic and rural area as well. Small banks and community banks are key contributors to places like mine. They help with economic growth and development. And like I said, my district stems from the border in deep South Texas all the way up north to San Antonio. So one of our banks, of course, have a unique community in which they serve. I'm concerned about many of the regulations that the CFPB has written over the last 3 years. Many organizations and associations have shared with you that Section 1071 rule are going to hurt our small businesses, leading efforts and the small businesses that have been leading efforts in our community. Many people in the community are seeking capital to grow their businesses and don't want their racial or other demographic information to be part of the loan process. My biggest concern is that the rules that the CFPB and the other federal financial regulators have drafted over the last 3 years were all written in a vacuum. Yet the totality of all the regulation has drastically increased the compliance burden on the financial institutions. Director Chopra, is anyone at the CFPB looking at the cumulative impact of all of these new regulations and the ability of smaller financial institutions to digest them properly to comply?
Yeah, we've actually received feedback on this, and one of the places I've been working with our staff on is to really look at what is the roadmap for which institutions, including the smallest banks, are making changes. For example, we tried to make sure that any of the rules that we were required to promulgate by Congress, they're working in concert with others, such as the required Section 1071 rule that we had to promulgate is working with any Community Reinvestment Act one. We're also looking at the systems and vendors that they're using. Often these smaller institutions don't have much choice when it comes to software vendors, so we tend to work closely with them to understand what are some of the things they are prioritizing and implementing. But I take your point. We really need community financial institutions, small banks, small institutions all over the country serving people. I don't want to see a world where people only have 3 or 4 choices.
So Director Chopra, as you just said, you're looking at these, having discussions. Would you commit to having some type of research, investigation, a report to actually analyze how this affects the community banks before implementing the 1071 rule?
Well, one of
Can
the
you commit
things
with
we
that?
did was we actually exempted a large number of institutions from it based on some of the concerns that you're raising. We wanted to see that it becomes something that we implement what Congress mandated with fidelity while also
reclaiming my
drawing the
time here. As I speak to regional banks in Texas, the regional banks that are growing in Texas, one of the fastest growing states, they are saying that they want to scale back their loan process because of how this is going to implement. Then my smaller banks that you have actually exempted are saying they don't want to grow. Why? Because they don't want to have to comply to this rule and all the mandates. They feel that it will actually hurt them. So what you're actually doing is you're pushing against the small banks and their desire to grow in communities who are Hispanic like mine, and you're also affecting regional banks to want to scale back loans to small businesses, mortgage lenders, real estate agents, those type of people, because they don't want to grow anymore. So I think that this is something that needs to be reported on before it's actually implemented. Thank you, Mr. Chairman. I will yield back.
Gentlewoman yields back. The gentlewoman from Massachusetts, Mrs. Presley, is now recognized for 5 minutes.
Thank you, Mr. Chair. Thank you for joining us, Director Chopra, and thank you for leading the Consumer Financial Protection Bureau in its mission to save consumers billions of their hard-earned dollars by cracking down on junk fees, helping wipe out 70% of medical debt from Consumer Reports, and ensuring that our data is accurate and secure. Before I go further, I just want to take a moment for the record. You know, after many attacks on the CFPB, could you just for the record say what the SCOTUS ruling was?
So in an opinion that was 7-2, authored by Justice Clarence Thomas, the Supreme Court made crystal clear that the CFPB's funding mechanism complies with all aspects of the appropriations clause. While we prevailed in this, it was a very costly delay. So many of our lawsuits against bad actors were stalled, paused, and in other cases, companies were not complying in the way we would expect them to.
Because I do have to get into some other things, could you just, yes or no for the record, is the CFPB constitutional according to the Supreme Court?
Yes.
Louder for the far-right folks in the back.
Yes.
Very good. All right, in a few months, millions of students will be returning to their college campuses to continue their education and start their freshman year, including in my district, the MA 7th, which is home to one of the largest concentrations of higher learning institutions in the country. This is an exciting time for a new generation of young people. 2 of my incredible interns join us today, in fact, for whom this is often their first time living alone, managing a budget, exploring their potential academic and career futures. However, many of these students have little or no financial experience, 0 income, and a lack of sufficient savings cushions for emergencies. In other words, they are vulnerable to financial exploitation. The CFPB has documented numerous cases of financial abuse in the student loan and credit card markets. It is increasingly clear that students are being driven towards more expensive products in the student prepaid and debit account markets as well. I would like to enter for the record the College Banking and Credit Card Agreements Annual Report to Congress. Director Chopra, the report raises concerns about transparency and compliance of banking products marketed to college students. What actions has the CFPB taken to ensure appropriate disclosure requirements are being met by the universities?
Well, I think this is a very, very significant problem that in some ways represents problems of the past. We saw how student lenders were giving kickbacks to colleges, steering them into a specific loan. We saw how credit card issuers were targeting on-campus and college. Congress banned those student loan kickbacks. They banned that on-campus giveaways by credit card companies. I do think we need to continue to make sure that not just the banks are providing the right disclosures, but we're really looking with the Department of Education about the relationships between colleges and banks.
Thank you. The report further highlights that the products marketed to students are often more expensive. For example, the debit cards marketed to students often consist of high overdraft fees, inactivity fees, monthly service fees, even though cheaper options are available, resulting in some students saying that they had to fast for days, use candles to reduce electricity costs, and even forego textbooks. This is unacceptable and frankly shameful, and it is all because of predatory and unnecessary fees charged to their accounts. Director Chopra, these stories are horrifying, and they're just a small snapshot of how students are being impacted. What steps is the CFPB taking to protect students from being directed to these expensive banking products which exploit their financial situation and inexperience?
Well, we're going to continue with the Department of Education's rules and our rules to make sure that there is not predatory and exploitative practices. We want to make sure that every college student that is starting this summer knows they should also look for an account that maybe before they come to campus, they do not have to accept what the college may be pushing on them. And there needs to be some real look about whether colleges should be getting kickbacks for any of this.
Finally, Director Chopra, I'm concerned by the reports finding that financial inducements to institutions of higher education from financial service providers may compromise the institution's ability to prioritize their students' financial well-being. I think we can agree that it poses a conflict of interest. So how is the CFPB monitoring these agreements, and what steps are being taken to mitigate any conflict of interest?
Well, what's fortunate is many of these agreements are now public. The credit card agreements are public. We make them public, but we will also take further enforcement action if there's violations of law. But I also think Congress should be thinking about reasonable limitations when it comes to these colleges profiting from it.
Thank you for your incredible work that you and your staff at the CFPB are doing. We appreciate your sweat equity and hard work immensely on behalf of consumers. I yield back.
Gentlelady yields back. The gentleman from Nebraska, Mr. Flood, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Scams and fraud in the financial system are an ever-growing threat to consumers and businesses, with the cost reaching tens of billions. According to the FTC, consumers reported losing more than $10 billion to fraud in 2023, and that's a new benchmark. Victims of cybercrime registered 880,418 complaints to the FBI in 2023, with potential losses exceeding $12.5 billion, representing a 22% increase in losses from the previous year. Mr. Chopra, will you commit to issuing a final rule on 1033 that does not discourage industry efforts to build critical tools to detect and prevent fraud?
Yeah, I'm totally aligned with that goal, and we are working to make sure that we can implement the rules to promote competition, protect data, but also to make sure that we are deterring, detecting, and stopping fraud.
Are you considering the development of these tools as it relates to restrictions on the secondary use of data?
So this is a tough one. Secondary uses of data are often really difficult to police. It's hard to know what people are using the data for. So we know that there will be some who want to say they're offering a loan, but really are just saying that, and they want to use it to sell or otherwise share. So we are looking about all the ways in which we can craft the rule to make sure that there's not bait and switches, and that there's really reasonable uses of the data that aren't intrusive or engaging in surveillance.
Thank you. I'd like to switch gears to a different issue. Last year, your general counsel gave a speech where he argued that the merchant exclusion within Dodd-Frank only applies to, quote, mom and pop, end quote, merchants. Is it your view that the CFPB has jurisdiction over retail stores, airlines, electric utilities, and anyone else who sells things, as long as they're a bigger company than a mom and pop?
No, I think that that's not the full context. So first of all, we absolutely do have jurisdiction over retailers, others, when it comes to things like the Fair Credit Reporting Act, other.
So any retailer, even a mom and pop store?
I think under the Fair Credit Reporting Act, if they are a furnisher, we would. That has not been a focus of ours in any way. But I would say the merchant exclusion is in the law. We have always adhered to that, and certainly that is, we're not looking at mom and pops when it comes to our work.
So we're having trouble understanding, because I'd like to remind you that the congressional intent was absolutely crystal clear as it related to this merchant exclusion. Senator Dodd of the Dodd-Frank fame said on the Senate floor, and I quote, "It was certainly always our intent not to include retailers and merchants under the auspice of the Consumer Financial Product Safety Commission. That language they have now offered and on which they work so hard makes that abundantly clear," end quote. Do you take the position that Senator Dodd was mistaken about the clear meaning of the Dodd-Frank Act, a bill that he wrote with then Financial Services Committee Chair Barney Frank?
No, I think that merchant exclusion relates to who is a offerer of a loan or a financial provider in the meaning of the Consumer Financial Protection Act. I'm sorry to get technical on it, but we absolutely adhere to that, and we wouldn't say, I think that was supposed to address a store that was offering the ability for someone to pay later for something, to exclude it. That's not a loan.
Finally, I'd like to close by highlighting an exchange I had with Acting Comptroller Sue last month. Sue said, quote, "Banking consists of 3 services that are bundled together: facilitating payments, making loans, and taking deposits. When payments becomes unbundled from that on its own, that is commerce. That's not banking," end quote. Director, do you agree with that description of the line between banking and commerce? And more so, and more importantly, are payments alone commerce?
I need to think about that a bit more, but generally speaking, we think about banking as collecting deposits, making loans, and movement of money. And I think that that is something that banks are really the critical component for doing all of it. I need to think about what that says. I think it sounds right, roughly, but I need to put more thought on that.
I would ask that you, in your extended comments to this committee, answer that question before the deadline proposed by the chair. And with that, Mr. Chair, I yield
I'm happy to discuss that with you, too.
Thank you.
The gentleman yields back. The gentleman from Texas, Mr. Green, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I thank the ranking member, and of course, I'm always honored to have our director here with us. Thank you so much for what you're doing to protect consumers. And if I may, I'd like to thank your staff, too. You have some very good staff members. They're always available to us to assist us. Let me start with this. The Supreme Court seems to have indicated that the CFPB is being properly funded, and I'm pleased to know that you can now take a breath. I'm not sure that the battle is over, because I have an article from Political Style regulating through blog posts, Republicans poised to attack CFPB director. So the battle isn't over. Apparently, the new challenge will emanate from the agency's funding, and it depends on the definition of the term earnings, Federal Reserve's earnings. And my hope is that people will understand that that definition is one that allows for the earnings to mean total net income, not net profits. But that's a battle that you'll have to continue to fight. You fight to protect the consumer, and then you have to fight to protect the agency from my colleagues who would like to end the agency. You have quite a battle on your hands. But let's talk about the absence of the CFPB and what veterans would have to contend with. Because currently you're serving 1.3 million active duty service members, 1.5 member family members of active duty service members, 770,000 members of the National Guard, 980,000 National Guard and Reserve family members, and 18 million veterans. What is it that these persons, in the absence of a CFPB, would have to contend with? We know that there are people who target them, who would take advantage of them when it comes to lending practices. Tell us if you would.
Well, one of my former colleagues, Holly Petraeus, used to describe some companies looking at service members as nothing more than a dollar sign in a uniform. We see in the data that they're much more likely to be targeted for identity theft, including their money and their data. We enforce the Military Lending Act. Since I've taken office, we've brought in a number of enforcement actions to vindicate those service members' rights. When it comes to veterans, many of them are subject to frauds and scams. We have a dedicated Office of Service Member Affairs that focuses on military-connected families, and we're very proud of that work, and it would be a mistake to simply shut that work down.
Permit me to ask this. In the efforts to shut down the CFPB, have you seen or have you had presented to you any proposal as to what would replace it? Any legislation been presented to you in terms of a proposal to replace the CFPB?
I'm not. I've heard about just elimination and defunding.
Elimination and defund. Sort of like with Obamacare, as it's called, elimination is fairly easy, so they thought, but haven't been able to perfect that, but never saw the plan to replace. Would you think that before we decide that we're going to eliminate this agency that's protecting these millions of veterans and their family members, that we'd have something that we would offer as a replacement?
And it also would create chaos for mortgage lenders and many others who depend on the rules to make sure that they are lawfully originating mortgages.
I'm pleased that you brought this up because unfortunately, I was here when we had the downturn in 2008, and we discovered all of these many things that were being done to take advantage of persons who were seeking a mortgage. Some of the various instruments were just dastardly imposed upon consumers. So thank you for bringing that up. My belief is that the CFPB is necessary, and if we didn't have it, we'd try to create it. Although in this climate, I'm confident that it would be impossible to create. So thank you for your service, and please continue to soldier on. Thank you.
Gentleman's time has expired. I now recognize myself for 5 minutes. I would just note that this committee did pass Mr. Barr's bill that would appropriate funds for the CFPB and create a commission. So the idea that somehow we're defunding and disbanding is false. Ms. Director Chopra, some of my colleagues have already raised concerns about the CFPB's directive to eliminate fees that institutions can charge, will limit access to credit for certain riskier individuals, and raise the costs of credit and services for all consumers. As of just this week, the CFPB initiated a rulemaking process to remove medical debt from credit reports. If a medical debt is owed by the consumer, how do you expect it to be collected?
Well, there's many financial providers, medical providers that don't report and they do collect. I would say this, we've done years and years of analysis on it, and there's also a prohibition in the Fair Credit Reporting Act for having medical-related information on credit reports. And we saw that there was really people seizing on that exemption to often use a credit report to coerce people into paying debts they already paid or don't owe. So we have proposed and are accepting comment on how we might restrict some of that abuse and put it more in line with what Congress intended.
Okay, so if I decided to apply for a mortgage, let's say under your rule, and a lender would have no idea that I skipped out on my medical bills because I don't need to include it on my credit application, and the lender would not be allowed to consider the debt that I owe when determining how much of a mortgage I can afford, correct?
No, that would not be correct.
Why?
Well, it doesn't really prohibit any lender from asking about what are people's income, debts, other things. So again, this is really about looking at the accuracy.
So you're supposed to self-report?
Well, there's lots of things that are not on a credit report, including your food expenses, other things that lenders often do ask. So when it comes to a credit report, it was meant to look for a lender to see for the loans that you have taken out, like a mortgage, credit card, auto loan, or student loan, how are you doing on them?
Right, how are you doing paying your debts?
Yeah, so we have not.
Right, so if the objective of a credit report is to show somebody who's going to provide you
your loans,
funding.
Your loans. So we
Right,
have not
but
proposed
if you're-
excluding
Right,
medical
but if you're,
loans or medical
excuse
credit
me,
cards.
if you're, the whole purpose of a credit report, right, is so that somebody knows whether or not somebody potentially could be a risky person to lend money to. And so if that is the objective, and you're saying, well, you don't need to include this, you don't need to report it, isn't it going to create a situation where they don't have an accurate financial picture of a prospective borrower? And won't that have an impact on our credit markets?
Well, I guess I'd ask you this. Let's say I just made up the fact that you owed me $10,000, and I put that on your credit report. When there's inaccuracies in your credit report, that has a huge impact on you. When it's false, when it's already paid, and what we see is compared to other types of loans, like mortgages or credit cards or auto loans, where you actually signed up for the loan, where there's documentation around it, there's a lot more information to assure that it's accurate. On top of that, medical bills also go through the insurance system. So you are often left with a situation where things are still pending, but often parked on your credit report. And that's why many lenders actually don't even look at it, because they know that it's not necessarily predictive of your performance on other loans. And that is what a lot of the research has shown. We have proposed the rule. We're eager to get feedback on it if there's places where you should adjust it. But we've did a lot of work over the years to make sure that there's a strong empirical base for this. And at the end of the day, the Fair Credit Reporting Act really does not permit medical information or your health data to be there.
So in your example, you talk about inaccuracies on a credit report, but can't consumers dispute those inaccuracies?
Yeah, but how long is that going to take right when you're in the middle of applying for a loan? You know, it will take so much time to file the dispute, wait, and then you're in some rope-a-dope between the credit reporting agency and the furnisher. This is why this has systemic problems. And I really want to encourage you. I know people feel they have to oppose this, but this is pretty reasonable what we're proposing.
Yeah, but as you acknowledge, there's a process to dispute for inaccuracies.
Yeah, but
And
there's not a
ultimately-
process where
Yes, sir.
medical billers get.
Reclaiming my time, thank you. My time has now expired. The gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you. Director Chopra, I commend you for your decision to propose the exclusion of medical debt from credit reporting. Medical debt is often the consequence of the unforeseeable, and therefore it reveals next to nothing about the underlying creditworthiness of an individual borrower. America's conventional credit scoring methodology, to me, is fundamentally obsolete. Not only does it include factors that have no informative value, like medical debt, it often excludes factors that have informative value, like rental payments. If credit reporting were to factor in alternative data like rent payments, most of the population, if not all, almost all of it, would become credit scorable. If GSEs, like the Federal Home Loan Bank of New York, Freddie Mae, and Fannie Mac, were to use credit scores that include rent payments and exclude medical debt, as required by law, millions of more Americans would have access to home ownership. 20,000 of my constituents in the Bronx and New York 15 would have access to home ownership. So for me, the single greatest solution to systemic racism in America is the creation of black and brown wealth through expanded access to credit and expanded access to home ownership. For the lowest income communities of color, there's nothing comparable to home ownership as a tool for broad-based wealth creation. I appreciate your mention earlier of trigger leads. I have serious concerns that unregulated trigger leads fundamentally undermine consumer protection and data privacy. When consumers apply for a mortgage, a credit reporting agency will often sell their private information without their knowledge and consent. Within hours of applying for a mortgage, consumers are often blindsided by a bombardment of telemarketing calls. Some of the lenders behind these calls are often bottom feeders, engaging in unfair and deceptive business practices. And so I worry that poorly regulated trigger leads are often an open invitation to predatory lending against unsuspecting borrowers. I'm curious, would you support legislation that would regulate trigger leads?
Yeah, I really have concerns about the big credit reporting conglomerates making money off of this, especially when we don't even know if these offers are really competitive or legitimate. You mentioned, Congressman Torres, that they might be bottom feeders. We don't even hear that much that these leads are leading to more competition, but I really do. I've talked to you and Congressman Rose about it. I think this is a key privacy issue we should work on.
Look, I feel deregulated trigger leads leads to predatory lending under the guise of choice and competition. Maybe the theory is that it will lead to more choice and competition, but the reality is that it's led to more exploitation. As you know, June is Pride Month, and so I have a few questions in the spirit of Pride Month. The Urban Institute released a report finding a 20% home ownership gap based on sexual orientation and gender identity. 5% of the 20% home ownership gap cannot be explained by existing data. And so as the administrator of the Home Mortgage Disclosure Act, CFPB is in a position to mandate the disclosure of more data so that researchers like the Urban Institute can ascertain the causes of the unexplained 5% home ownership gap. Is the CFPB willing to take action to expand the scope of the Home Mortgage Disclosure Act to include data relating to sexual orientation and gender identity?
Yeah, we're thinking of looking more deeply in general at the homeownership gap in older homeowners, and there's certainly issues when it comes to sexual orientation and other factors. With respect to Home Mortgage Disclosure Act, there's a number of issues that we are looking at for modernization of that, and that is certainly one of them. I think it's not slated in the very near term, but when we do an assessment and we look at it, I think that's going to be something that we will also have to comply with Supreme Court precedent on this.
The CFPB administers not only the Home Mortgage Disclosure Act, but also the Consumer Complaints Database, which is an abundant source of data. Is the CFPB willing to expand the scope of the Consumer Complaint Database intake form to include sexual orientation and gender identity?
We may have done some consumer testing on different identification factors. I think there's always the balance of how to get people through and file. But I'm happy to ask the staff about whether that's been done before.
And just a final question on medical debt. Even if there's a process for disputing, don't you think we should get it right the first time?
Yeah, and often when people dispute, the immediate answer is that it's correct without showing any receipts.
But we should strive for maximum accuracy at the very beginning of the process.
Actually, it's the law for those credit reporting conglomerates to have reasonable procedures to, quote, assure maximum possible accuracy.
I think my time has expired.
Thank you, the gentleman from Florida. Mr. Dollins is now recognized for 5 minutes.
Thank you, Chairman. Director Chopra, welcome back. Question. So the CFPB refers to buy now, pay later products as the pay in for, number 4, product in which consumers split a retail purchase, typically $50 to $1,000, into 4 equal interest-free installments, with the first installment, the down payment, due at checkout, and the remaining installments due in 2-week intervals. Would you agree with that?
Yeah, generally, that's how the market is today.
Okay, so you would agree that buy now, pay later products have a separate and distinct characteristics from traditional credit cards?
Yeah, they actually are in many ways substitutes for it, but they have a different way people borrow and repay.
All right, so then why is CFPB starting to interpret credit card regulations to include buy now, pay later plans?
It's actually how Congress wrote it. So Congress, when they amended the Truth in Lending Act, they talked about the different devices and accounts that could be used to draw and create loans. So what we did was we got actually a lot of questions. What are the existing provisions that apply? So a lot of the things that apply to credit cards do not apply to them right now. But there was some pieces of it as it relates to billing statements, disputes, and errors that did apply, and we wanted to make sure that there was some consistency around that.
Wouldn't you agree that the primary thing that makes a credit card is interest, and that buy now, pay later agreements are interest-free?
Yeah, so the way the Card Act and the Truth in Lending Act, there's a separate part about finance charges. So finance charges is what often triggers how you have to show an annual percentage rate and other pieces. So it is true that not all aspects of the credit card framework do apply, but some do.
I would argue that without interest, none of the aspects of the credit card framework would apply.
Well, I think they don't have to disclose, for example, an interest rate. That's one part of it, but as it relates to bills and disputes, that's really common for lots of types of loans.
All right, a couple other things. For over 50 years, Congress, under both Democrats and Republicans, have determined that the best way to promote competition and consumer choice while also ensuring robust consumer protection is through disclosure-based laws and regulation. The CFPB has been initiating a series of blogs, circulars, advisory opinions, and rulemakings that appear designed to upend that disclosure-based approach to consumer protection, often by labeling lawful and fully disclosed bank fees as unfair or abusive. If consumers cannot be trusted to make their own decisions after receiving disclosures, do you favor government mandates about product features and fees?
Well, respectfully, disclosures are not the only things that are required. There are some things that have to be disclosed, but there are other prohibitions. So like I mentioned in my opening testimony, in some cases there are restrictions when it comes to data, permissible purposes, and you can't disclose that away. So we have tried our best to say, here is how existing law applies. Disclosures have their role, but I would argue in privacy notices, disclosures aren't enough. And you've passed a number of laws over the past 50 years that touch disclosure and non-disclosure.
Yeah, but we're not talking about privacy aspects. We're talking about fees and fee structure.
But
and CFPB has, hold on, Director Chopra. CFPB has been labeling different fees and fee structures as misleading, abusive, et cetera. In that vein, is the CFPB outside of the framework that has existed on Capitol Hill for 50 years around disclosure being the way that consumers are provided information?
So not at all. For example, Congress banned certain types of fees altogether.
Whoa, but real quick, to that, before you go, that's Congress banning the situation, not an agency making a promotional view of a situation that is lawful, correct?
So it is consistent what we have done with congressional prohibition. So what we have done on credit cards is exactly in line with the congressional prohibition on excessive or disproportionate fees.
Yeah, but you cannot take a congressional prohibition on something else.
No, but it's consistent.
But hold on, Director Chopra, and then label it as abusive on something that is allowed under federal law. Now you're picking and choosing.
No, I'm not. Everything we've done has been exactly and squarely with what the prohibitions that currently exist. Now, if there's a loophole that's in the regulations we inherited, and when we do a look back to determine whether it made sense, that is part of the process.
Okay, fair enough. Thank you, Director Chopra, for coming in. I yield back.
The gentleman yields back. The gentleman from Nevada, Mr. Horsfeld, is now recognized for 5 minutes.
Thank you to the chairman, to the ranking member for holding this necessary hearing. We continue to see alarming increases in the frequency, sophistication, and reach of scams. Meanwhile, the complexities of our financial system allow many good, hardworking people to be inadvertently harmed by incorrect or incomplete information being distributed. As evidenced by the stunning 1.5 million complaints that the CFPB received, there is a massive need for your agency to continue to stand up for everyday working families as they attempt to navigate our financial sector. And with an impressive 99% response rate from the offending parties, the CFPB is regularly delivering results. And I want to thank you on behalf of my constituents. and the American people. When it comes to financial scams or fraud, unfortunately, our brave service members are among those who are targeted regularly. As we continue to debate the National Defense Authorization Act on the floor, I want to stay focused on the service members at the heart of all of this and follow up with you on our previous discussions about your initiatives to protect those who are at risk so we can keep them safe. Unfortunately, for my home state, the volume of complaints from service members ranks third in the country on a per capita basis. But thanks to your efforts, relief is on the horizon for many, as the CFPB has delivered an astounding $183 million in redress to service members and to veterans. Director, your report pointed to increased attention towards innovative solutions that will make it easier for our service members to take advantage of these programs. Can you please discuss some of the areas where you see more opportunities to streamline current methods for getting service members the support that they've earned?
Well, certainly, the National Defense Authorization Act has been able to provide lots of different enhancements from service members on their cars, their mortgages, their student loans, and more. The Service Member Civil Relief Act, the Military Lending Act, which we enforce, have real important roles in this. Our Office of Service Member Affairs has encouraged financial companies to really streamline the process so that they can automatically give benefits to service members. We found that a lot of reservists and National Guard, in many cases, have left money on the table because of the bureaucracy around it. We also see when it comes to repossessions of an automobile or a foreclosure, those Service Member Civil Relief Act protections are absolutely critical. And of course, the Fair Credit Reporting Act has special provisions for service members when it comes to protecting against identity theft.
Thank you. Let me turn to the private identity verification process. Director, there's been a lot of discussion around the use of credit header data recently. It would be helpful if you could clarify what exactly is included in credit header data and what is not.
Yeah, so credit headers are the short form credit report. So it typically has your name, other names being used, past addresses. It will typically not include what's called a trade line, which is what you have been borrowing and whether you've been paying back. That short form credit report does have some sensitive data, so we are looking at its uses, but of course, we're going to be thinking hard about how it's different from the rest of the credit report.
Thank you. Whether it be fraud protection services or vital public safety initiatives, it's crucial that you continue to examine ways that the rulemaking surrounding the Fair Credit Reporting Act could hinder legitimate businesses, and I encourage you to work to mitigate unintended consequences.
Absolutely.
Thank you. Director, the last time we spoke a bit about enforcement actions to curtail the unscrupulous actors in the credit repair marketplace. I wanted to give you the remainder of the time to discuss any meaningful developments that you have since last November particularly.
Well, we were able to reach a very significant multi-billion-dollar judgment against a ring of credit repair scammers, Lexington Law. That has been a major step forward that is going to do a lot for so many people. But I do really worry that when people have inaccuracies on their credit report, they go to many different ways to try and fix it, and often they can be subject to some very unscrupulous practices. And we're going to continue to look and work with others to crack down on this.
Thank you for your work, and I agree with the exclusion of medical debt from credit reporting and look forward to working with you on that as well. I yield back.
The gentleman yields his time. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I'm going to start out with just the disparity in the view of the role of government between Republicans and Democrats. Most Republicans want the federal government and every government to do as little as possible, to maintain the rules of the road, to have a military, to invest in infrastructure, to manage interstate commerce, and really not much else. And my colleagues across the aisle, Democrats, they want to use the government at every level to reshape society in their perfect utopian image. It has not worked. It's been tried before. And I always tell people, I have one mother, I don't need another one. I'm bringing this up because I think the wild swings in policies coming out of the CFPB after elections does not facilitate competitiveness in the global economy. It does not make the U.S. economy strong, and it impedes businesses' abilities to invest because they do not have clear expectations long-term of what policies are coming out of the CFPB. So, I mean, can we agree that between 2016 and 2017, and then between 2020 and 2021, the role of the CFPB was very different?
Well, under the law, it shouldn't have been that different, but yes, there has been different approaches by various directors.
You would disagree with a lot of the things that Mick Mulvaney did as CFPB director.
So
his approach is dissimilar.
Yeah, I would say we have a more focused rule of law approach when it comes to our enforcement work. We try and enforce the law as you write it.
And he would probably take a very different position than you would as it relates to that. He would probably say that you're exceeding the scope of your authority and you're regulated by enforcement and you're really impeding customers' ability to get access to credit, because every time that a business is impacted by something from your office, those costs are passed on, and either customers are abandoned and denied opportunities because of the challenges they face, or they have increased costs because compliance has costs, and those costs are passed on. So anyways, I only bring this up, and I think we can simply agree that with the Republican administration, the CFPB has a different role than a Democrat administration. I think we can agree on that.
Well, I think the way to address your concern is often to legislate more.
You're exactly right, and that's what I was going to bring up. So Andy Barr has a bill that would create a commission that would appoint the CFPB director and have additional accountability. And I think...
But why not legislate substantively on consumer protection? Why not actually put into place...
We've passed like 45 bills this year, so I'm trying to put small points on the board. We're not going to solve the problems that you seek, but I think if we found a way to give the director increased accountability and really bipartisan appointment, I mean, I think that would give the CFPB additional credibility, and more importantly, it would stop these wild swings in policies that are impeding the U.S. businesses from competing in the global economy. Because while they are competing in the U.S. economy, they're also competing in the global economy. So do you agree that wild swings in policies between administrations impede businesses' ability to make investments and predict the future?
I would say that having a multi-member commission, and I've heard criticisms of multi-member commissions swinging as well because they're odd number. I believe elections have consequences, and our democratic system is the way things work. And if you want to change consumer law, that's the role of Congress to pass laws.
So we have 6 months.
The law of the land.
I hear you, but we have 6 months until an election, and all the polls show that there's going to be a change in administration. So if there is a change in administration, I would imagine that whomever is in your position in January is going to have a very, very different view of the role of the CFPB. And I probably agree with that position more, his or her view more of the role of the CFPB, but I think we can all agree that the wild swings in how the CFPB performs its function is not conducive to U.S. competitiveness. So I just really think that we have 6 months to take up Andy Barr's bill and to make this problem go away, or we can talk about it in 4 years and 6 months, and we're going to have the same issue again, and we're going to have an election coming up, and I just think that the sooner we can stop these wild swings in policies, the better off we're going to be. And with that, Mr. Chairman, I yield back. Thank you.
The gentleman yields back. The gentlewoman from Michigan, Ms. Lieb, is now recognized for 5 minutes.
Thank you so much. You enforce the law. $183 million you got for our veterans?
Yes.
I mean, come on, corporations, businesses, follow the law. Follow the law and it won't cost you any money. Now, I know you're not going to be able to say that to my colleague, but it's true. I mean, look at this. 39 public enforcement actions involved harm to service members and veterans, including 6 enforcement actions or violations of the Military Lending Act. My God. Corporate greed is on array here in our country. It is. I mean, look, it's not like, poof, the money is it's going to our residents. It's going to our constituents and our families. I mean, I'm just looking at all of this, like which is crazy, the amount of money our banks were just banking off our residents, that $6.1 billion you were able to literally go after these large, big banks, that some of them have business plans that over 50%, I don't know, maybe that's the credit card companies, over 50% of their business plan was overdrafts and fees. That's what it was. They were making money off of charging our residents these fees. I mean, it's not like you can take this money away from them if they applied it under the law, correct? They were violating consumer law. It's not, that's what you're doing. So if we have a new administration, that's what's going to happen. Nothing. Do you know how many times I sent various cases, Ranking Member Rodgers, you know how many cases I sent around service loan folks with student loan issues? Oh my God, the loan servicers were out of whack. I mean, give me a break. So I want to talk about bye-bye medical debt on credit reports. I am so incredibly happy to see that. One of the things that I think, Director, what really was just mind-boggling is hearing my residents talk about the fact that they would have to file bankruptcy, all of these things, because it was weighing down on them being able to access, housing, employment, and so forth. Can you talk, and I know this from the study that you all showed, when you did the study, it showed, the significant impact on our American families across the country to have medical debt on their credit report. But it was really an inaccurate, picture of someone's risk profile. It really was. Somebody gets sick and it gets on their credit report. Having that weigh down as if they bought some poor, I don't know, some car, I'm not very good at the car stuff, but something expensive, a luxury item. So, Director, let's talk about that burden and what this is going to do. How is it going to transform the families around the country?
Well, I think it's going to reduce so much of the harms, especially from inaccurate credit reporting of medical bills, which really debt collectors are not able to.
You got to explain that because you're really good at this. Explain that because people don't get it. It gets on their credit report and it was incorrect.
Yes, I think this is the difference. There's so much problems when you park this medical bills there. It may still be being adjudicated by an insurance company, and on top of that, no one is seeking out to have medical debt. You borrow money for a car because you want to get the car to get to work. You borrow money to get a home. You borrow money for an education. You're not just sort of eager to get medical debt. Mm-hmm. And I think that there's so many different facets of this. So we studied carefully the differences, and we have proposed also being more in line with what Congress wanted was to restrict medical information on people's credit reports. And I think this is a reasonable intervention to stop a lot of the inaccuracies. I think one of your colleagues said, well, can't they dispute it? How long will it take to deal with that? And what will the harm be when you're applying for that loan?
I mean, I think our chairman of our committee was talking about having to dispute it because I guess he actually paid his bill and it still somehow ended up.
So many people pay it just because they want the abuse to stop.
Yeah. Director, what are some of the coercive practices that debt collectors currently engage in, such as debt parking?
Well,
Explain that to the American public.
Debt parking is where you put a debt on someone's credit report in the hopes that you can coerce them into paying to remove it.
You're too nice. You mean bully them.
Even if you don't even owe it or you've never even heard of it. And by the way, so much of the public has also paid one of those debts, even if they didn't owe it.
It's unbelievable. Another concerning practice, of course, is increasing use of medical credit cards and financing plans. I mean, corporate greed is just coming up with all kinds of various inventions. Just to be clear, Director, this week's proposed rule doesn't affect debts paid to medical credit card issuers, does it?
Yeah, if you pay a medical expense with a credit card, any type of credit card, that will be classified separately and is not covered.
I think that's something we should actually look at together, but I really appreciate this. I just don't want my families, it's not their fault they got sick. They're just seeking help. And, medical debt, again, shouldn't be weighing down our families. Thank you so much. I yield.
The gentleman's time has expired. The gentleman from Texas, Mr. Session, is now recognized.
Chairman, thank you very much, Mr. Troper. You're almost at the end of this visit that you got with us, and thank you for taking time, not just informationally to be with us, but I think your attitude I appreciate very, very much. I admit I was here when we started and have been gone for a while, so you may have received this question or have covered the subject. I appreciate you indulging me to try that again if that's true. Much of business today is concerned about hacking, malware, a lot of fraud, theft of consumer data, theft of money, putting companies in the lurch as they try and work with law enforcement, as they try and figure out the payment of these things. What does your agency and what is their role in this regard? What is your viewpoint and interaction, and what do you see?
I am really disturbed by the increase in ransomware that we're seeing throughout the U.S. economy. You do see actors overseas being able to take information that can then be used to access systems, and then often there is an extortion payment. I think it's a very challenging issue that we work with the Treasury and others, particularly to protect our financial institutions. Some of them have data on half of America, like the credit reporting agencies. For me, the Equifax data breach was a huge wake-up call, because it wasn't just, the hacking isn't just about trying to defraud a consumer. It was used for statecraft purposes. So it is really protecting data is not just protecting consumers, it's really protecting our country too.
So is that in your mission, or is your mission only to go protect consumers, not to protect what might be financial institutions?
Yeah, we have certain authorities that our focus is on protecting consumers, but often when it comes to safeguarding data, and in the financial space, the Gramm-Leach-Bliley Act governs some of this. So we have been working more when it comes to understanding where the risks are, but that is not really our core mission, that we try and stay abreast of everything that is going on, because it also impacts the broad array of fraud that is happening everywhere, and especially with artificial intelligence, generative AI, we expect that to go up. And I do think we have to take some action as a Congress, or you all should, to make sure our defenses are there.
Okay, well, what are those ideas that you have that we have not perhaps reached yet? Because as you know, we're trying our very best to make it easier for companies that do find themselves in these circumstances to report, to acknowledge things. Several years back, they were soundly attacked for allowing these breaches to happen, and I think now there's been a more recognition that it may be happening to everybody. Oh, by the way, it happens to government also.
Yes.
Despite their best efforts to perhaps criticize others who have these same things. What are those activities that you think you see from your perspective that Congress should do a better job at?
So I think when it comes to data protection, data security and data privacy are just two sides of the same coin. So right now, under the Gramm-Leach-Bliley Act, there's provisions for safeguarding of information, and then there's separately privacy disclosures. I think more limitations on what companies can monetize, I think that will also increase data security because there will be less thirst for that information.
Are you saying gather less information that they would have available? Go back about 15
Yeah, I
seconds.
think there are places where companies are engaging, and I see this in the technology sector, of collect every single thing possible and keep it and monetize it.
But isn't that what you're asking banks to do in some respect with some of your rulemaking?
No, we are actually...
Gather more data and information?
Well, there's places where Congress has asked us to request more, but when it respects other issues, there's actually laws on the books to dispose of it and make sure that it is deleted rather than permanently retained.
Thank you very much. I'm going to take to heart what you've said and go look at it, and I'll get with you offline then. Thank you very
Yeah,
much,
let's
Mr.
meet
Chairman.
again.
Thank you.
Thank the gentleman from Texas. I now recognize myself for 5 minutes. Director Chopra, thank you for joining us here again today, and I appreciate you taking the time to come and speak to us in our office. During that time, I shared with you many concerns that we had from my fellow citizens in Iowa. I shared with you that I have seen since the beginning of your tenure things that are frustrating, including an office that seems highly politically motivated in both its decisions and what I see as the agency's overreach and significantly having a negative impact on my small and community banks in states like Iowa. In fact, just a few weeks back, we discussed ways to strengthen Iowa's financial system and the overall tiered system. But as I shared with you, what I heard before and what I heard as recently as yesterday is that this is not happening, and they're not getting the answers and responses that your team pledged that they would make. I find this frustrating. So I ask again, please, listen to the folks that you are dealing with, particularly those further down, regional and small banks. Your regulations are causing real injury to Iowans, and certainly they come at a cost. So to clarify, listen, learn, execute. Please don't just regulate. Specifically, I remain concerned about Section 701 rule, which requires banks, particularly the smallest ones, to meet your 81 data field. Now, it was just discussed here. We are very concerned about the amount of information that financial institutions are collecting, but ultimately, your institution as well is taking more and more information and putting it into what I consider a treasure trove for a cyber actor to exploit. We'll get to that in a moment. I'd first like to talk about the 81 data fields. Director Chopra, do you believe each one of these data fields is absolutely essential if you were able to pick which 81 were being required from our lenders?
So I appreciate what you're saying. I do have to respectfully disagree with the 81 data point, but the way we were under a court order to complete this rule by March of 2023, there were certain data points.
I understand,
that were
Director. My
required.
question for you is, do you believe each one of those 81 are critical and essential?
We believed that the points that are being collected are exactly what was in line with the congressional statute.
So they could not be scaled back in any fashion?
Well, they could be, but there was a provision in the statute that where we collected comment on, and many lenders
Have you provided any guidance to this body on which ones you would like to see removed?
Well, the rule has been finalized. It is
Have you
currently
provided any
subject-
guidance to this committee if any should be removed?
That's really, it's statute, and so Congress is the one.
Congress is the one in charge of statute, you're in charge of the implementation.
exactly what I'm
But have you provided any feedback on any of the 81 that should be removed? I have not seen any.
There are not 81.
I'm going to move to my next point. I heard directly from a small business owner who has written to you. I will use the 1071 small business rule, leading specifically that they are a small and rural community bank with 17 full-time employees. The amount of training required for your 81 points is not without cost. Software that they do not have must be implemented. Additionally, the time involved as being part of an ineligible burden as a requirement of this regulation. Note, to quote, "We do not have enough manpower on staff dedicated required would mean one full-time person. Even with that, because of the regulation that HMDA reportable transactions not be reported even if you are a non-HDMA reporter. As well, this being fully trained would not only be enough to be able to compile and track the 81 data points, but also to correctly report them. There are penalties within the regulation for doing this incorrectly, so it also require a specialist or a quality control officer, neither of which we have within our small staff. Plus, the loan officers are not supposed to collect or review these 81 points because they might be accused of a Fair Lending Act violation. Cost and direct impact to folks back home. I want to ask specifically, how did you come up with a reporting threshold of 100 small business loans?
So we actually, in the final rule, compared to the proposal, tailored this and exempted a substantial number of more banks. We tried our best to create thresholds and a tiered way of implementation as well. So that
Director
the
Chopra, do you
smallest
believe a
banks-
bank with 17 people would be considered a lower tiered threshold?
Yeah, so we came up with different sizes.
I
not just
appreciate
for-
that, but the reality is that your sizes are a one-size-fits-all. Because of my 250 small banks in Iowa, not a single one was exempted.
I think we quadrupled the loan threshold for the exemption.
The impact has happened to every small bank in Main Street, Iowa right now, and I am concerned that between this rule and the beneficial ownership rule, and small businesses are on the hook for 133 additional data points. That is a cost and a tax on every Iowan. With that, I hope you listen, Director Chopra. With that, I yield my time to the gentleman from Wisconsin. Mr. Fitzgerald is now recognized for 5 minutes.
Thank you, Director. I know you've been sitting here for a while. I recently sent a letter to you related to the potential effect of your Fair Credit Reporting Act rulemaking activity related to data brokers' impact on identity verification and know your customer KYC requirements. In the reply that you guys sent back to us, CFPB will not issue a rule that will prevent financial institutions from meeting the requirements of the Bank Secrecy Act. So as you consult with FinCEN and others on the rulemaking, will you be exploring use-related exemptions if financial institutions are using data to comply with the BSA and other identity verification requirements?
Yeah, we haven't proposed a rule yet, but the answer to your question is yes. But to offer a little bit more color, I think the concern we have is not when financial institutions are using that data because they're using it for financial purposes. It's really when others are using it for unknown reasons, potentially for nefarious reasons. Data brokers they are assembling background reports about people. And under the Fair Credit Reporting Act, there are certain limitations that the law provides, and we're just trying to make sure it is keeping up with the times. But the answer to your question is yes.
Okay. So brief outline of the FCRA rulemaking stated that CFPB is considering a proposal to, quote, clarify the extent to which credit header data constitutes a consumer report, which the CFPB notes would likely reduce, perhaps significantly, consumer reporting agencies' ability to sell or otherwise disclose credit header data from their consumer reporting databases without a permissible purpose. So, do you have any idea, like, you can give me a percentage on enforcement actions carried out by FTC or CFPB dealt with, based on improper use of credit header data? I mean, is this a big issue or not?
Well, I think it's more, the credit header is really the short form report. It does have a lot of sensitive information, not as sensitive as the rest. So I think what we're trying to do here is to make sure that the FCRA, which really was restricting how background reports are created, and I've taken a look at how this works in health, education, others. There's different frameworks for each. We're trying to determine what is the right way to make sure there's adequate protection of that. But again, as it relates to detecting fraud, we're hyper attuned to that issue. And when financial institutions are trying to authenticate identity, we want to make sure we're really cognizant of that.
In May, you spoke at a mortgage industry conference and strongly criticized the business practices of companies that are providing services to help originate and close mortgages. It feels as if you guys have reached some conclusions about closing costs before you even opened up the request for information. Where exactly in the federal statutes is CFPB given the authority to set prices for fees in the mortgage closing process? I guess that would be the first question.
So we have a number of laws, including the Real Estate Settlement Procedures Act, that govern some of this. But mortgage lenders around the country have been consistently complaining to the CFPB about getting ripped off when it comes to credit scores and credit reports. The price increases they are facing have been extraordinary, and I think that it is limiting their ability to evaluate all potential applicants. So we are working with them on ways that they can actually obtain this information in a more competitive, cost-efficient way, because ultimately, many consumers will bear this, or the mortgage lenders themselves will bear those costs.
Okay, let me sneak in one more. In the CFPB 2017 arbitration rule, which was repealed by Congress, the Bureau would have required financial institutions to submit arbitration records to the Bureau to publish. Now the Bureau is proposing a rule that is substantially similar. I guess the question would be, why can't the Bureau follow Congress's very clear directive in this area?
We have not proposed a rule that is substantially similar. It's nothing like what was overturned, nothing at all like it. The original one restricted the use of those clauses. This is broadly about understanding contract clauses that waive rights. It is nothing alike.
Okay, thank you. I yield back.
Thank you, sir.
Gentleman yields back. I now recognize myself for 5 minutes of question. Director, I think I'm the last one to go, so. I'm going to follow up a little bit on what my colleague was just talking about with the outline for potential FCRA rule, which included a rough definition of data broker. That term, for the purpose of the outline, included any firm that collects, aggregates, sells, resells, licenses, or otherwise shares personal information about consumers with other parties. Casting such a wide net runs the risk of disrupting innovation in financial services and classifying many entities as data brokers whose business does not include the selling of consumer data. Since consumer data protection starts with the preservation of consumers' rights and choices, is the Bureau currently considering any limitations or exceptions to the outline's broad definition of data broker?
Yes.
What are they?
We haven't proposed a rule yet. I think we've been trying to track really broadly, how do we make sure that the FCRA, which protects consumer reports, and consumer report is somewhat broadly defined as the aggregation of consumer information by a third party. We're trying to see and look, where is the data broker industry doing some of the same things that the consumer reporting industry when are they assembling consumer reports? So that's our approach. It's trying to make sure that there aren't just rules for those who agree they're consumer reporting agencies and those who wish to sidestep. So I know that Congress is thinking about more privacy legislation. As my opening comment said, if you all want to weigh in on this definition, that would be better and faster.
Thank you. And I just also want to follow up, my colleague before asked about this. I think your answer was yes when dealing with the Bank Secrecy Act and Know Your Client rules. And to ensure the alignment with your commitment to members of this committee and what you said in your letter, you're going to consider exemptions or other safe harbors if financial institutions and their service providers in good faith use the data for purposes of compliance with BSA obligations?
Yeah, I think the concerns that we're trying to address are really about data brokers who are abusing or misusing data. I think the financial services industry has already accepted for decades that they have to undertake certain limitations when furnishing or processing data. So we're just trying to create a level playing field. The answer is yes.
Yeah, your goal is not to mess with the banks complying with Bank Secrecy Act.
I don't know why we would want to mess with that.
And you were being asked about medical debt before, and you had said, a lot of people don't actively choose to have medical debt, but the rule the rule seems to include elective surgeries in its broader definitions of medical debt. Could you explain why elective surgery debt should not be reported under the rule, and what about cosmetic procedures, strictly cosmetic procedures?
Yeah, so just respectfully, I think our understanding of the term elective, they may be medically necessary, but it's just scheduled. But I think you're referring to sort of discretionary cosmetic.
Yeah, I'm not talking about a knee replacement.
Yeah. Knee replacement could be elective, but when you're saying things that are truly that, we've actually looked at that marketplace. That's not actually where the issues in medical bills on credit reports are. Many of those types of procedures, those are not covered by insurance.
I understand that,
but often require payment up front. So we don't really see that as an issue, but if that is something you want us to explore, to look specifically at cosmetic, we don't see that as an issue right now, but we are accepting comments on that.
All right. I believe it's in the definition, so we're just.
Well, elective can be medically necessary.
Cosmetic, I believe, is in the definition as
So
well.
we will take comment on it and make sure we're dealing with it.
Okay. Just want to get a clarification on the 1071 final rule. There was a grace period policy statement that I believe gave a grace period of 12 months during which the CFPB would not penalize bona fide errors. With the new compliance dates, now that the injunction is up, does the CFPB intend to keep that grace period as previously promised, or does it take a different position now that the injunction's up?
Yeah, so we have to comply with certain aspects of the court, so I don't want to misstate it, but I do believe we have definitely published updated compliance dates in accordance with the court. I need to check and get back to you about if there's other aspects that we have not yet issued, but as a general matter, we're trying to make sure everything is consistent.
Wonderful. Thank you very much. I'm out of time. Chairman, I would like to thank Director Chopra for his testimony today. Without objection, all members will have 5 legislative days to submit additional written questions for the witness to the chair. The questions will be forwarded to the witness for his response. I ask Director Chopra to respond no later than August 1st, 2024. This hearing is adjourned.